Mahati and Kirti together. Where is Mahati? Good morning, friends.
Good morning, sir.
Good morning, sir.
Good morning. Let us enter the last revision class. The favorite subject for majority of you, obviously to the person is sitting in front of you also, income tax. I think Sri Ganesh or Aditi will be sharing the screen. From there, we'll start.
I'll be
Before we-
sharing this.
Yeah, start. So before we get into the subject, let us understand one thing. So this is one subject which is reasonably standard. Okay. So with this, let us start. Income tax is a subject which is reasonably standard, but probably after you attend these three sessions and also followed by RTP analysis, which I'll be telling you a little later, I want this time everyone to get out of out in this paper. GST has already been done, so income tax I am going to start now. Fine. So come down, ma, Sandhya, keep it down. So as we normally do, initially we'll be going by. You can make little bigger, ma, little bigger for the benefit of. Yeah, enough. I think everybody can see. Kirti, you can see.
Yes, sir.
Okay. Right. Now I'll go in the same order today. I'll not deviate substantially. Just to tell you, how much mark is for income tax?
60 marks.
Income tax is for 60 marks and GST is for
40 marks.
40 marks. So, 125 marks paper. So, in that 125 marks paper, so we have income tax being done. Income tax being done for 60 marks and GST will be done for 40 marks. Fair enough. Now, in income tax again, okay, so good number of MCQ questions will be asked and some technical questions also will be asked. So, let us take care of the same. Fine. So, what is income?
Sir.
I'm audible? Okay. Okay. Good morning. Let us continue our discussion on income tax. So income tax is for 60 marks and GST is for 40 marks out of almost around 125 to 129 marks question paper. And it's a little technical subject, but all CAPSite should be loving this subject because it's one of your favorite subjects, isn't it, Kirti? Yo. So what is income tax? Income tax is a tax on total income earned by an SSE during the previous year chargeable to tax in assessment year. Each word is extremely important. The first line, if you can see the first line. So what is tax? Section 243 defines tax as income tax. No doubt the definition contains something like a super tax, FBT, etc., which may not be relevant for us. What is total income? That is very important. Total income means total of incomes referred to in section 5. So when we go to section 5, we'll understand the aggregate of various incomes will become total income. Next one is very, very crucial word. Is tax on total income earned by an SSE. Who is an SSE? Crucial, extremely important. So SSE means a person. So there's one more word called person there. Person has been defined in section 231, who is liable to pay tax or any other sum under this act and includes representative SSE or a person against whom the proceedings have been initiated, blah, 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 deemed SSE, SSE in default. So, 2 arrow marks. Kirti, a student having 10,000 rupees income. She is a person, but she is not an SSE. So Monisha is earning, let us say, 4 lakh rupees salary income minus 50,000 rupees deduction, 3,50,000. So she has to pay the taxes on 3,50,000 rupees. There may be some rebate. That's a secondary issue. So she is an SSE. She is a person as well as SSE. Even though her tax payable is 0, so her total income exceeds the basic exemption limit. That's why she is supposed to file the return. Next, Sandhya, total income is, let us say, 20 lakh rupees. She is a person. She is liable to pay the taxes. She is also an SSE. So first of all, you should be a person. Person who is liable to pay tax or any other sum. So in the first example, Kirti, 10,000 rupees income. She is a person but not an SSE. Monisha's case, 3.5 lakh rupees is the total income. Her tax payable may be 0 because she will get some 87A rebate, but her total income is above the basic exemption limit of 2.5 lakh rupees. So she is liable to file the ITR. If she doesn't file the ITR, so she may have to pay some interest, penalty, etc. coming into picture. Penalty to be very specific. So, or 234F, there is a fees concept coming into picture. So you are liable to pay tax or any other sum. Any other sum can be now interest, penalty, or fees. There are 3 separate amounts which are mentioned apart from income tax. Under this act, obviously, which is this act? Income Tax Act of 1961, and includes representative SSE. So non-resident having income in India, is he liable to pay the tax in India? Answer is yes. So he may not be able to come and pay the taxes in India. He will appoint an agent. Okay, let us say Ganesh is appointed as an agent. So he is called representative SSE. Deemed SSE. So minor, a person who is normally below the age of 18 years. However, when guardian is appointed, he continues to be minor up to 21 years. So in such a scenario, okay, so minor doesn't have a capacity to contract. Section 11 of the Indian Contract Act, Mori Bibi versus Dharmadas Ghosh, Honorable Supreme Court decision. Any contract with a minor is what, Kirti? Void from the beginning, void ab initio. So if the minor has income, let's say he has some FD interest income or cricket playing income, etc. So in such a scenario, so if minor has to file the return, he cannot sign. So the parent will sign. That's why the parent will be called deemed SSE. And the last one, SSE in default. A person who is not responding to the notice of the department, who is not respecting the law of the country, then he will be called SSE in default. So prima facie, SSE definition, very, very important. SSE means a person who is liable to pay tax or any other sum under this act and includes representative SSE, deemed SSE, SSE in default. Now, minor's income is concerned. Let me conclude right now. A minor can have income under 2 RMRs, either by his own skill, knowledge, expertise, manual work, or any income of the child suffering from disability referred in ATU. It is blind, it doesn't have legs, blah, 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 unfortunately. So such minor's income will be minor's own income. Example one, a normal child is playing cricket, 16-year-old. It is playing cricket, its own skill, knowledge, etc. It is its own income. Or unfortunately, a blind child having FD interest also comes under the left side. So these incomes are minor's own income, but minor cannot sign the return. That is why the parent or maybe guardian can sign. They will be called deemed assessee. Understanding, Kirti? Yeah. Next, second error mark. Any other income, that means a normal child having FD interest, law says it is not a minor's income at all. It will be clubbed in the hands of the parent having who is highest total income in the first year of clubbing. So I repeat this. So minor's income, 2 RMRs. So minor's income by skill, knowledge, expertise, or manual work, or any income, very important word, any income of a child suffering from disability comes under the left side. That is minor's own income. Minor himself is an assessee, but minor cannot sign. That's why the parent will be called deemed assessee. Right side, normal child having FD interest. You cannot imagine a child going to Canara Bank and saying, uncle, keep an FD. It's not possible. So parents would have kept. That's why these incomes will be clubbed in the hands of the parent who is having highest total income in the first year of clubbing under section 64(1)(a), and such a parent will be given exemption up to 1,500 per minor child. How many children? How many ever you have. Okay. If you got 5 children, 1,500 to 5. There is no restriction here. Unlike section 1014, somewhere they say maximum 2 children. Clear about it? Fine. So income tax, the tax on total income earned by an SSC, very important section. You must know this. Previous year, 2 within bracket 34, read with section 3 defines what is previous year. Previous year means the financial year immediately preceding the assessment year. For income tax purpose, there are 2 years. The year in which you earn income is called previous year. Immediate next year where you're supposed to compute and file the income tax return after paying the taxes is called assessment year. The year in which you earn income is called previous year. So the year in which you're supposed to file the return is called assessment year. So the definition of previous year is the financial year immediately preceding the assessment year. So it is normally 12 months, but it can be less than 12 months as per proviso to section 3 in following 2 cases only, where a new business or profession is started in the middle of the year or a new source of income arises in the middle of the year. So in that 2 cases, it can be less than 12 months. Whereas what is assessment year? Section 2(9). Assessment year means the period of 12 months commencing on 1st April every year. Can assessment year be less than 12 months? Stupid question, because the definition only say it is a period of 12 months. How can 12 months be lesser than 12 months? Not possible. So it is always 12 months. 12 months. So normally income of the previous year is chargeable in assessment year, but in the following cases, in the following 5 cases, it can be taxed in that previous year itself. So the income of the previous year, let's say 1920, what is relevant for us? Am I fast? You're able to recall? In the revision class, you should have a vision, then only we have a revision. So income of the current previous year shall be taxable in the next year. But in the following 5 cases, previous year income will be taxable in the previous year itself. Slab B, because most of those cases are tax evasion cases. That's a slab that badwa. Okay. So the example, what is slab B? Acronym to remember. Okay. Slab is SLAP, non-resident shipping business. L means a person leaving India. Then AOP, etc., which is formed for a particular purpose. You're transferring the property to avoid the tax. Loss is pay the tax and then get lost. Then the last one is discontinued business. So in all these cases, income of the previous year shall be chargeable in previous year itself. So be careful. Previous question. Can the previous year be lesser than 12 months? Answer is yes. Only 2 cases. Can the income of the previous year be chargeable taxable in previous year itself? Answer is yes. Only following 5 cases. Understood? Yeah. Next question. Can the previous year be less than 12 months? Yes. Can the assessment year be less than 12 months? No. Clear about it? Okay. Who is a person? That's the definition given under 231. Okay. It is an inclusive definition. There are 7 categories of person. Almost everybody is called. Lord Venkateshwara is also a person, because it's an inclusive definition. Person includes individual, HF, company, firm, AOP, local authority, AJP. That is a any other artificial juridical person not falling under second category. So what about Lord Venkateshwara? He is also a person. So he's standing there and collecting crores together money. Why? Why is collecting money, Kirti? For paying interest for the marriage, for which he has taken a loan from Kubera. That's what you call belief we have. So Madhya Bekendra boys, so Lord Venkateshwara also was not bad, because for getting married he has taken loan from Kubera, and whatever amount is collecting is paying only buddy interest. Makal is paying only interest. So why normal man should get married? Still people who don't learn, isn't it? Fine. So first one, income tax, tax on total income earned by an SSC, section 27, during the previous year, chargeable to tax in assessment year. Chargeable tax in what? So very important term, charge. So can your mobile work without charge? Today infrastructure definition has been changed. Earlier infrastructure means college, bench, desk, etc. Today infrastructure means mobile, laptop, etc. Isn't it? So this income should have been chargeable to tax. Chargeable. So a simple example, stupid example. I imported goods from Japan. No China now. Okay, I import goods from Japan. I have to pay income tax. Meaningless sentence. When I import goods, I have to pay custom duty. The chargeability of custom duty gets attracted. I cannot say when I imported goods, I have to pay income tax. It's meaningless. Same way, when I sold goods, I render survey, I have to pay income tax. Ultimate income may attract, but when I sell the good, the chargeability is of GST. Whereas when I earn income, I have to pay the tax. When I earn income, I have to pay the taxes. So if I don't have income, there cannot be taxes. That's why I made a beautiful statement. You can highlight that if you can. Just underline that. Capital receipts are normally not taxable unless specifically included. Revenue receipts are normally chargeable unless specifically exempted. What does it mean? Now, beautiful explanation I used to give. In front of my house, there is a mango tree. Okay, so 3-4 mango trees. So, and every year mangoes are grown. If I sell the mangoes grown in mango tree, that's revenue receipt, which is a regular in nature. If I unfortunately cut that mango tree and sell it, it is a capital receipt. What you receive from the source, Kitty, is called revenue receipt. What I receive from the source is a capital receipt. I am an employee of Monisha Limited. Every month I receive a salary. That is a revenue receipt. I am receiving it, okay, from the source. Whereas if I lose that employment, that will be called a receipt for the source. It is a capital receipt. So I repeat, okay. Whenever I receive from the source, mangoes or every month salary, it is a revenue receipt. If I lose that employment or source, and if I receive something, it's called a for the source. Whatever I receive for the source, it is called a capital receipt. Capital receipts are normally not chargeable unless specifically included. For example, when I lost my job, it is a capital receipt. But section 17 subsection 3 very categorically says it is a profits in lieu of salary. It is, even though it is a capital receipt, is taxable. Whereas if I take a loan from my friend, okay, Suhas, so loan is a capital receipt. That capital receipt cannot be taxable. Understanding? When revenue receipts are normally chargeable. Salary received, house property interest, house property rent received, interest received is always income chargeable. Whereas agricultural income, it is a revenue receipt. But if it is in India, section 10(1) says it is exempted. Understanding? Fair enough. Next. So income tax is the tax on total income earned by an estate during the previous year, chargeable to tax in assessment year. Then we have on section 87A. So very important term. If you are a resident individual whose total income does not exceed 5 lakh, he shall be given a rebate up to rupees 12,500. You remember this. Very important term, resident. I was seeing that RTP, they'll be asking questions on exception to exception. So take care of that. Extremely important. So resident individual. So I am, let's say 24 years. I get 87 year rebate. Kirti is, let's say 56 years. She gets 87 year rebate. Whereas if Monisha is 65 years, she is eligible, but our basic exemption limit itself is 5 lakh. When the basic exemption limit is 5 lakh, so where the question of 87A? Okay, so or resident SSC having total income up to 5 lakhs, she will get an exemption. I hope all of you are able to understand. So not fast. I hope it is not fast. Okay, so revision class, obviously it should be a little faster because efficiency and effectiveness has to be improved, isn't it? Fine. Next, 2-1A, the most important term again, agricultural income. Sir, I am growing sugarcane. Is it agricultural income? Generally, answer is yes. But where? If I am growing sugarcane in Bangalore, Delhi, Chennai, it is agricultural income. Yes. If I am growing sugarcane in South Africa, for the purpose of income tax, it is not agricultural income. Sir, it is agricultural income. But the law says if it is in India, South Africa is in India, no. So that's why it is not. So what is agricultural income? 3 RMRs. Rent or revenue derived from an agricultural land situated in India, first one. Rent or income from the activity of agriculture by himself or the person who is cultivating the same. Okay, the last one, income from farm building. Only for farm building there are some conditions. So first example, I have a land, agriculture land. I am a lazy fellow, you presume. I give it to Sharanya. Okay, Sharanya grows paddy, wheat, etc. The rent what I receive is agriculture income. First point. Second point is, okay, I myself do some agricultural activity there. I am only doing the agricultural activity there. If I am only doing agricultural activity there, then whatever the income I generate, that is also called agriculture income. Now, I give land to Sharanya. Sharanya will be doing agricultural activity. She does agricultural activity. Very, very important. She does Bharatanatyam dance there. Nah. It is only if she does agricultural activity will be considered as agricultural income. So farm building, very important. Farm building means a building which is inside that agricultural land or in vicinity to that, nearby, close by. That farm building should have been used for as a dwelling house for the agricultural laborers, storehouse, etc. Understanding? Fine. So this agricultural income definition has got 3 RMRs. Rent or revenue derived from an agricultural land situated in India. Used for agricultural activity, including the marketing process. The third one is farm building. But a farm building should be subject to local land revenue tax or situated in non-urban area. Very important, my dear friends. Confuse markobedi. So non-urban. So in income tax, we don't use a category like this. Either urban, non-urban. Sir, what about semi-crack? I am not interested in discussing. So urban, non-urban. What is urban? So start with the population of a town or a municipality or a cantonment board having 10,000 or more. If it is less than 10,000, they say it is not urban. Bitako, leave it. 10,000 population area plus 2 kilometers. 10,000 you add 1 0, it will become 1 lakh. 1 lakh plus 6 kilometers. Add one more 0. 10 lakh plus 8 kilometers. What is that meaning? Let's say I am in Bangalore. Bangalore population is 1 crore. So the entire Bangalore area, and from the local limits, not from Majestic or Vidhana Sauda, from the where the Bangalore limits end, from there you take 8 kilometers. That will also be considered as what? Urban. So if you have, listen carefully, if you have a land, let's say in the heart of the city, let's say JP Nagar, there you are growing sugarcane and selling. Is it agricultural income? Answer is yes, sir. Because there is no restriction of urban or non-urban. But in Bangalore, JP Nagar agricultural land I do have. So 2 RMRs. I grow paddy and I sell. And side by side there's a farm building. I got some rental income. Paddy is always agricultural income, urban or non-urban. But the farm building in an urban area shall not be considered as a agriculture. It shall be considered as a maybe income from other source, and it is definitely going to be taxable. So farm building matra condition ide, where yavudakku condition illa. Are you clear about it? Similarly, later when I go to the capital gain chapter, be careful. Under capital gain chapter, when the urban agriculture land is sold, it is subject to tax. Capital gain will come. Whereas if it is non-urban, it is not a capital asset at all. If it is not a capital asset, there is no question of a capital gain coming into picture. Fine. So agricultural activity, again, we have got some rules. Rules 7A, 7B, 8 and 7. RCT, rubber, coffee and tea. So I am growing, let us say, tea leaves in Ooty. In addition to that, I am also converting it into tea powder and selling. So how much is agriculture? How much law itself has told? Rubber, coffee and tea, they have given the percentage. So in all the cases, easy to remember. percentage given for agriculture is more because the operations are more, Kirti. So for rubber, it is 65% is agriculture. For coffee, normally 75%. But if it is roasted, grounded, etc., if you do some extra masala, etc., if you do, then it will become 60%. And tea, it is always 60%. All these percentages I told for agriculture, that means balance is the business income. For example, tea, agriculture is 60, business income will become 40%. Whereas there is a rule 7A, 7B, and 8. Any other activity, sugar cane you grow, convert it into sugar. Neenu nakkare, baalu sakkare. Okay, ಅಥವಾ ಅವಳು ಸಿಕ್ಕಳು ಈಗ ಮನೆ ತುಂಬ ಮಕ್ಕಳು ಅಂತ. So in such a case, fair market value of that sugar cane used in sugar manufacture shall be added to the agriculture income. The same amount shall be reduced from the business income. So it is like a 10 minus 4 if I have. 10 minus 4, you know the answer. In between, if I add and deduct, let us say 6, so the answer remains the same. 10 minus 4 is equal to 10 minus 6 plus 6 minus 4. Answer will be same. Same way, the fair market value of the sugar cane will be added to the agriculture income and deducted from the business income. All of you are able to understand? Okay, fine. So the next one. This entire agriculture income is completely exempt. So agriculture income referred in section 2(1)(a), very important, is exempt under the first exemption section 10 within bracket 1. So just to give the skeleton, okay. So as I was giving the introduction at the beginning, income tax is concerned. So 60% of the question paper, so 129 mark, okay, will be containing some MCQs, will be containing small 2-mark theory question, 4-mark theory question, problems here. So you cannot take a chance here. Everything you should be knowing. So agriculture income is exempt is a stupid answer. Agriculture income referred to in section 2(1)(a) is exempt under section 10 within the bracket 1. So come down. It is completely exempted. There is no question of taxation, completely exempted. So there is a concept of partial integration, which is printed at the end. What is partial integration? If you have got agricultural income as well as non-agricultural income, understand carefully. Kirti is having 5,000 crores agricultural income, tax payable 0. If she has got 5,000 crore agriculture income and also has a house property income, salary income, then partial integration comes into picture. Two conditions. Your agriculture income should be above the basic exemption limit, 2.5 lakh, 3 lakh or 5 lakh as the case may be, depending upon your age. And non-agriculture income should exceed, agriculture income should exceed 5,000 rupees and your non-agriculture income should exceed basic exemption limit. I repeat, two conditions. Your agriculture income, suppose in front of your house, if there's one small coconut tree and from there you're getting 2,000 rupees by selling some coconut. Loss a bitako, I can't keep a track it. Agriculture income should be above 5,000 rupees. How much? Above 5,000. And non-agriculture income, say salary income, house property, whatever, should be above the basic exemption limit applicable to you. First point. The second point, how do you do partial integration? 3 simple steps. Step number 1, add agriculture income to non-agriculture income and compute the tax. Step number 2, add agriculture income to basic exemption limit and compute the tax. Step number 3, step 1 minus step 2. That's it. Okay, so you know it's printed little later. Fine. So partial integration, taxes agriculture income partially. All of you chat. Yes or no? Partial integration, chat. You can chat now. Yeah. Partial integration, taxes agriculture income partly. So small portion you are paying the taxes. So chat. Yes, no, yes, no. Yes, why atava Puneet, Sharanya, Dhruti, Suhas. Very good. Excellent. Excellent. All of you give the perfect answer. Answer is no. Answer is what? Shravanya? No. That's it. Very good. Okay. So enough. Yeah. Answer is no. The past agriculture income is completely exempt. When I say completely exempt, there's no question of tax. So I gave an example of Kirti having 5,000 crores agricultural income. Tax payable is 0. Only when she has some other income or other income gets taxed at a higher slab. Instead of getting taxed at say 5%, it may get taxed at a 20%, etc. Next one is, so section 1, short title, commencement, etc. It extends to whole of India. Section 2 is about definition. Section 3 we saw previous year. Section 4 we saw chargeability. So to the extent possible at intermediate level, CAP students, I made you to remember almost all the sections because I am preparing you for the CA course, not just for intermediate. When you come to CA final, you must know that. So others who are listening, it is better if you remember the section. If you don't remember, also not a big deal. But some sections like 2 subsection 7, 2 within bracket 24, you cannot forget. As and when it is important, as and when it is relevant, I will let you know. Fine. Next one is section 5. What is section 5? The scope of total income. So 245 said total income means as referred in section 5. So, but before understanding section 5, we need to know what is section 6. What is section 6? Residential status. Now, first question is, we most of will have an idea. Sir, I'm an Indian citizen, I'm a resident. No connection between citizenship and residential status normally. There are some exceptions. Normally, no connection. An Indian citizen, can become a non-resident in India. Barack Obama, an American citizen, can become a resident in India. Because residential status depends on number of days of stay in India and not based on citizenship normally. Understanding? So section 6 talks about residential status. Section 6.1, very important, you must remember this. An individual, 2 RMRs. Either he can be resident or he can be non-resident. He satisfies any one of section 6.1. In the previous year, he stayed for 182 days or more. In the board, you can see 182 days more. Or in the previous year, he stayed for 60 days and earlier 4 years, he has stayed for 365 days. If he satisfies that condition, he is a resident. If he doesn't satisfy any one of section 6.1, he will be called non-resident. This question is compulsory. He will be called non-resident. Full stop. Non-resident means full stop. If he is a resident, it can be further classified into 2 RMR. R but NOR, R and OR. R but NOR is if section 6.6, there are 2 conditions. Any one other condition is satisfied, is called R but NOR. So visualize, so you can write it down. Section 6, 2 RMRs. All of you write down better. Chart. The regular class, we are given the chart. All of you know that. So section 6.1, 2 RMRs. Only for individual. Resident, right side, non-resident. Below resident, you write any one of section 6.1. Below non-resident, you write none of section 6.1. Full stop. Non-resident means full stop. None. Under section 6.1, 2 RMRs. That said, but NOR. But NOR. Below you write any one of section 6.6. Some textbooks they write ulta. First R and OR, that is not right. R but NOR, section 6.6. Right side, R and OR. None of section 6.6. So I repeat the chart. 6.1, any one of section 6.1, resident. Right side, non-resident, none of section 6.1. Full stop. Under resident, 2 RMRs. R but NOR, any one of section 6 within the bracket 6. Right side, none of section 6.6 is called R and OR. So 6.1 conditions, what is printed here. So what she has made it yellow. 182 days or more in the relevant previous year, atava 60 days in the relevant previous year, and 365 days or more in the earlier 4 years. Understanding? And for the 60 days, there are 2 exceptions. Very important. You can note it down. Okay, 60 days exception. An Indian citizen leaving India for employment abroad. Be careful, employment, not higher education. An Indian citizen leaving India for employment abroad or as a crew member of Indian ship. Crew member, CREW, crew member of Indian ship. Second exception, an Indian citizen or person of Indian origin. An Indian citizen or person of Indian origin comes to India on a visit. Comes to India on a visit. So in these 2 cases, go by first condition only. 60 days is not applicable. You have to go by what? 182 days. So 182 days only satisfied. So who is a person of Indian origin? Either yourself or your parents or grandparents. Only 3 generations should have born in undivided India. Present India, Pakistan and Bangladesh. Not China. Don't include China. China is always outside the world map in a short period. So India, present Pakistan, present Bangladesh. So if any one of you yourself or parents or grandparents are born in undivided India, you will be given this. You will be considered the person of Indian origin. So if you are settled in South Africa, you come back to India, then in that case, don't go by 60 days, go by 182 days. Understood? Fine. This is about individual. So HF, part of the management and control is in India, section 6(2), resident in India. Else, it is a non-resident. Company may not be relevant because at intermediate level. Indian company is always resident in India. Other company, Poem. Who is Poem? Kavya. Place of effective management, Kirti. Place of effective management is in India. Okay. So Indian company is always resident. Tata Limited, don't ask the question. It is a resident. Foreign company, resident if Poem is in India. If Poem is outside India, it is a non-resident. Fine. 224 we'll see later. So section 6. Now go back to section 5. So we know only individuals and HF can have 3 categories. I repeat, only individuals like you and me and HF can have 3 categories. R and OR, R but NOR, non-resident. Everyone else can have either resident or non-resident. They do not have a category called R but NOR. They do not have a category called R but NOR. So here, how is it taxable? After learning section 6, you have to go back to section 5. If you're R and OR or simply R, global income is taxable. Anywhere in the world you earn income, you have to pay tax in India. First point. If you're last category, non-resident, only 2 incomes. Received in India, earned in India, full stop. Whereas if you're R but NOR, it is like non-resident. One extra condition is income from business control from India or profession set up in India. Understanding? Fine. So I repeat, R and OR, even if you earn income in Mars, it is taxable in India. Non-resident, if only 2 income received in India, earned in India. R but NOR, it is like a non-resident, but extra one condition, income from business control. Shetty sir, Panbida, Bangalore is the head office. I got a branch in UK, Panbida in UK and Makkatrigali. That branch income is controlled from India, taxable if I am a R but NOR. And whenever I say received, it includes deemed to be received under section 7. Whenever I say earned, it always includes deemed to be earned under section 9. Important sections. Agreed? Too much Akta, is it going over the head? Okay, income tax is super standard. Enjoy. Next, come down. Section 7. Only 3 incomes are covered under section 7. Deemed to be received. Annual accretion to RPF. That is every month employer contributes something, interest gets credited. From URPF to RPF when you transferred balance, then employer's contribution to pension scheme referred in ATCCD. These are 3 items. All these 3 items will be added as the last 3 items under section 17(1). Salary definition will include again everything. Then ATCCD, when we go to ATCCD, we'll discuss. Section 9(1), important again, extremely important. Deemed to accrue or arise in India. I was telling you in the regular class, due basis, accrual basis, and receipt basis. 3 are not same in income tax. I am an employee of Kirti Limited. 26,000 is the salary per month. I am an accountant, administrative employee. So 26,000 means every day, 26,000 divided by 26 working days. 1,000 salary accrues. Say if I work for 5 days, my salary accrued is 5,000. So next, it falls due, say as per the appointment letter, 5th of next month. That means my income is only on 5th of next month. Whereas she would have paid me only on 8th of next month. That means I received only on 8th of next month. So every day it accrues. 10th day, 10,000 rupees. 15th day, 15,000 rupees. But I don't have a right to receive unless that 5th of next month comes. Because as per the terms, I am eligible to receive only on 5th of next month. Arthakta idea. So, samajh mein aa raha hai? Very good. So, on 5th of next month, I am going to receive that. That is due wages. Whereas if I receive on 8th, that is the receipt wages. So, accrual, due and receipt. Important. Salary income is taxable. Section 15. Due basis or receipt basis, whichever is earlier. Whereas business income and other source, they go by accrual or cash system. So salary is due basis or receipt basis, whichever is earlier. That's why if the salary falls due on 5th of next month, for previous year 1920, instead of considering April to March, I may have to consider March to February. I repeat this, a few confusion. So accrual means it's always April to March. Previous year, what is your previous year applicable to November 20 exam? Previous year 1920, 1st April 2019 to 31st March 2020. If I'm talking about salary income, and if the salary as per the appointment letter says 5th of next month, then March 2019 falls in April 2019. That means March 19 salary will be taxable in April 19. March 2020 salary falls in the next year. The next batch students will take care of it. समझ में आ रहा है? So due basis means you have to consider March to February in this example. Accrual means if it's the business income, April to March only, no confusion. So deemed to accrue or arise in India, these sections, these clauses rather, are mainly applicable to non-resident. Because if you're a resident, anywhere in the world you earn income, it's taxable here. Why should I talk about it? 911 business connection. When a non-resident carries out the activity through an agent in India, so mainly that is called business connection. But there are some exceptions, CP and CD. So when carries out part activity in India, then purchase for the purpose of export, news collection, etc. You can just glance it. Then income from salary if it's earned in India. So it's always going to be deemed to accrue in India, including the rest period or leave period. A Japani fellow comes to India, 6 months employment contract, and he has been given 1 month leave period. Wherever he is, salary taxable is 7 months. Salary paid to an Indian citizen by the government of India. So please understand this, very, very important. There's a question in your what do you call the problem areas. Indian citizen has been deputed outside, or he has been sent as an embassy, Indian embassy. Even though he's working outside, he's a non-resident, no doubt, but it's always deemed to accrue or arise in India. Because it's as per the Indian government order. He's an Indian citizen, government of India. Next, salary paid by an Indian company outside India. Okay, 9-1. So 911 business connection, salary earned in India. Next, salary. Next, fourth one should be, there's a printing mistake there. Fourth one is dividend paid, not salary paid. The printing mistake. Dividend paid by an Indian company outside India. So fourth one, dividend paid, correction malkole. Dividend paid, it's okay. Dividend paid by an Indian company outside India. So if it's an Indian company, when the dividend is paid outside India, it is deemed to, because Indian companies earned income in India. That's it. Next, 5, 6, 7 are similar. If Barack Obama has given loan, if he earns interest from India, it is actually from India, but the loss is deemed to arise in India, because from India are not taxable, in India are taxable. So if it is from India, if they want to tax it, they will make it as a deemed to accrue or arise in India. If Barack Obama exports goods to India, he may be earning income from India, it is not taxable. But if they wanted it to be taxed, then from Manna, they should create it as a deemed to accrue or arise in India. So loan given, Barack Obama has given loan to Kirti. He is earning interest from India, but law says it is deemed to accrue or arise in India. So once it is deemed to accrue or arise in India, it is taxable. Interest income earned, royalty income, or fees for technical services. The 8th clause may not be so relevant at intermediate level. Fine, come down. 222, dividend, chargeability of dividend. So section 222 defines that rule 10 may not be relevant at your level, at inter-level. So 2 within bracket 22, dividend. So previous year 1920, this is the last year where we will be discussing about dividend distribution tax, because from next year there is no 115. First, what is dividend? So let us take an example. A Limited earns income of 10 lakh. It has to pay normal tax, let's say 30%. So 7 lakh bacha hua. Out of 7 lakh, when they distribute 2 lakh dividend, company has to pay dividend distribution tax under 115. So what is dividend? You should understand. 3 RMRs. Final dividend declared in AGM. Interim dividend declared in between 2 AGMs. 222 mainly deals with the deemed dividend. The word used is dividend, but it defines mainly deemed dividend. Short form, AD to the power B, LRL. Any distribution of assets A, debenture, deposit certificate, etc. B means bonus only to preference shareholder. Then liquidation of company, reduction of capital, and the most important one, loan. Throughout my discussion, I call it as a X company. X company means a company in which public are not substantially interested. If that X company gives a loan to RMRs, to a shareholder, registered shareholder holding 10% or more, there is a deemed dividend in his hand. Atava, X company gives a loan to, let's say, another company called Y company. In that Y company, Mr. X holds 20% or more. I repeat this. Confusion. So, let us say A Limited, so ABC Private Limited. ABC Private Limited is the X company. That is a company in which public are not substantially interested. Only this. Tata Limited, Bata Limited won't come. The last clause is only for company in which public are not substantially interested, mainly private companies. So it gives loan to RMRs. ABC Private Limited, Kirti holds 12%. Loan given is a deemed dividend. Capital receipts are normally not taxable unless specifically included. Loan is a capital receipt but still taxable because of this. Whereas Tata Limited, I am holding 15%. If I take a loan, it is not covered because Tata Limited is a public company. Second remark. What Kirti does, Kirti, if she takes a loan, it is taxable. So Kirti has, whereas a partnership firm, loan is given to the partnership firm, and Kirti holds 10% or more in this X company, and she holds 20% or more in that partnership firm, then the loan given to that partnership firm is also considered the deemed dividend in the hands of shareholder called Kirti. Artha. So there are two categories of dividend, Kirti. One is given directly to the shareholder or to a company, entity, etc., where you hold two RMRs. In this private limited company, 10% or more, and in such partnership firm, 20% or more. Extremely crucial point. समझ में आ गया सबको? Fine. And it is a dividend, company has to pay the DDT. Fine, come down. And only when there is accumulated profit, three conditions for chargeability. There should be a company, there should be accumulated profit, and there is a dividend distribution in whatever form. Fine. And section 8 says dividend is chargeable, final dividend in the year of declaration, interim dividend when it is unconditionally made available to the shareholder, due dividend in the year of declaration, etc. 115, chapter 12D, D for domestic company, D for dividend, D for domestic company. If you don't learn, D for donkey also. Okay. So all these are D categories. Chapter 12D, 115O, talk about dividend, domestic company, DD, only for domestic company. When a domestic company distributes any of the dividends, what is mentioned supra, it has to pay 15% DDT with the 15% plus grossing up. So 15 divided by 85 plus 12% surcharge plus 4% says it comes to 20.56% effectively. So, and whatever the dividend declared has paid within 14 days. Special point for 222E, that loan category, what I said, no, you must remember it is 30%. So there is no grossing up as far as 222E is concerned because already 30% hai. All other dividend, final dividend, interim dividend, 222A to D, they have to pay 20.56%, whereas 222E, the loan category, the dividend rate is 30%. समझ में आ गया? This is about the first portion where around 10 marks to 12 marks I expect. Introduction to income tax. Till now what we did. Now you breathe in. I'll breathe out. What did ladies do in last 6 months? So ladies at home, what they do last 6 months? Only one thing: cook. Nothing other than cooking, Papa. Isn't it unfortunate? Even some men also would have done it. Enjoy. Now let us move on to the most important area, around 50 to 60%. When I say 60%, I'm talking about the 60 mark question, where the questions will be on the heads of income. Talegadu, heads of income. I went a little fast till now because the introduction stage. Now let's go a little slow. I cannot be too slow also. Chapter 4 gives introduction to heads of income. 4A to 4F. 4B is omitted. They are consecutively numbered. Income from salaries. You can write down, all of you write down. Chapter 4, read with section 14. So make 3 columns, rather 4 columns. First column, chapter number. Next column, sections. Next, name of the head. Next, chargeability. Under that, chapter 4, 4A. 4A. How do you write 4A? Roman number 4. Chapter numbers are always Roman number. Roman number 4-A. 4-A. Then 4B, you write red ink omitted. Those who are red ink. 4 color pen we suggest you to use. At caps, we have multiple color usage. 4A, salaries. 4B, omitted. 4C, 4D, 4E, 4F. Here 4D, make important mark. You must know this 4D chapter number. Okay, I'll go by the row wise. 4A, 15 to 17. Income from salaries, or salaries. Dash, chargeability what? Due basis or receipt basis, whichever is earlier. Due basis or receipt basis, whichever is earlier. Understanding? Next, 4B, omitted. It was earlier interest on securities. So 18 to 21, they are omitted. 4C, 22 to 27. It is the blocks you remember. Extreme case, if you cannot remember the individual section. 22 to 27. Income from house property, IFHP. Normally accrual, comma. 25B, just write 25B, is on receipt normally. That is unrealized rent athava arrears receipt, comma. Also notional head. If you got 3 houses, 2 self-occupied, 2 are nil. Third house is taxable, even though you are not earned even single pi. Notional head. समझ में आ रहा है? Third, next point. Okay, so 4D, chapter 4D, important. Section 28 to 44 DB. 28 to 44 DB. to 44 DB. to 44 DB. What is the taxation principle? Chargeability? Heady. Accrual or cash followed consistently. Accrual or cash basis followed consistently. 145 subsection 1. Next, 4F, 4E, capital gains. 45 to 55A. 45 to 55A. Normally accrual. Normally accrual, comma. 45 within the bracket 1A, that is insurance money, comma. 45 within the bracket 5, compulsory acquisition, receipt basis. Tushar, last one, 4F, 56 to 59, IFOS. Give arrow mark from business income. Same thing. Accrual or cash consistently followed. So business income and other source similar. I've also told you, if you want, you can write 28 into 2 is equal to 56. Business income charging section is 28 into 2 is 56. They go hand in hand. समझ में आ गया क्या? Okay. So with this, 14 is heads of income. 14A says expenses related to exempted income shall not be allowed while computing taxable income. Agricultural expenses cannot be claimed against a textile business. That is logical, no? That's it. Fine. With this, let us move on to the heads of income. First head, income from salary. I call it as the three related sections. Enapa? Three related. So, three sections, 15, 16, 17. Under 15, there are three RMRs. 15 is a chargeable section. It is taxable on due basis or received basis, whichever is earlier. However, arrears, if you receive, it is taxable as and when it is received, unless taxed earlier. Partner's salary is not covered here because it is income from business. 16, deduction. There are three deductions. 16, 1A, standard deduction up to rupees 50,000. Be careful, even if you are a pension employee, you'll get it. So you are getting a pension, you'll get 50,000 rupees. Family pension nahi milega, up to 50,000. 16 to entertainment allowance. Government or non-government will be added to the salary first. For government employee, they give a reduction up to rupees 5,000 or 1/5 of the basic salary or actual year received, whichever is less, you have to buy 100. 16.3, professional tax, 2 RMRs. Borne by the employer, add and then deduct. Whatever amount given. If it is paid by the employee, borne by employee, merely deduct. समझ में आ रहा है? Fine. So 15 there are 3 RMR, 16 there are 3 RMR, 17 there are 3 definitions. 17.1 salary. So wages, annuity, pension, etc. Section 7 only, whatever the last 3 points I said, add. 17.2 is extremely crucial. I'll be connecting it with the rule 3. And 17.3 is profits in your salary. What is 17.2? Perquisites. You must remember this. So 17.2 perquisite and rule 3 violation. Almost I'll connect it to the extent possible. Clause 1 RFA, clause 2 concessional RFA. Both put together, rule 3.1 says 3 RMRs. Sorry, 2 RMRs. If you are a government employee, listening? So in all the cases when the RFA is given, perquisite is equal to X plus Y minus Z. Let's come ulta. Throughout my class, Z means amount recovered from the SSC. Amount recovered. Y here means furnishing given. Furniture, AC, whatever given. If it is owned by the employer, add 10% of the original cost. It is hired by the employer, add higher charges. So Z means what? Amount recovered from the employee. Y means furniture given. Furniture given 2 RMRs. Owned by the employer, add what? 10% of the original cost. If it is rented or taken it on higher, add higher charges. What is X? It depends. 2 RMRs. If you're a government employee, license fees. If you're a non-government employee, under that 2 RMRs again. If the accommodation is owned by the employer, it can be 15% of the salary, 10% of the salary, or 7.5%, depending upon the population. Big city, more than 25 lakh, or small city, more than 10 lakh, or least smallest city, less than 10 lakh. Respectively, 15%, 10%, and what? 7.5%. If it is rented by the employer, he has taken it on rent and given to the employee, then actual rent what he pays, or the highest of 15%, whichever is less. Where if the accommodation given is in hotel, 2 RMRs. If it is on transfer, up to 15 days exempted. If it is more than 15 days, so even 16 days given, not 1 day, entire 16 days, or otherwise on transfer, even for 1 day, 24% of the salary or actual hotel charges, whichever is less. And if it has been given more than one accommodation, for first 90 days on transfer, they say whichever is less. Beyond 90 days, all the accommodations are fully taxable. This is about RFA. 17.2.2 concession RFA, minus Z is covered. 17.2.3 annuity. 17.2.3, okay, annuity or any benefit provided the specified annuity allowed. It should not be annuity, make a correction. Amenity, spelling mistake. It should be amenity or benefit given to the specified employee. Who is a specified employee? Note it down, all of you. Specified employee. So basically they're trying to talk rich employee, 3 RMRs. Director employee. Second one, an employee having substantial interest, 20% or more. Third category, an employee whose monetary salary can increase the size little bit, Sandhya, if required. Let us see. Yeah, enough. Perfect. Monetary salary after deduction under section 16 is greater than 50,000 per annum. So you are a specified employee. If you are a specified employee, there are 5 perquisites which are taxable. Write down 5 perquisites additionally taxable. Additionally, normal perquisites are anyhow taxable. Additionally taxable. CS get. Chandrasekhar Shetty get anta. You should get what Shetty sir is saying. If you don't get what is the income tax I'm telling, it's of no use. CS get. So normally they are CTC minus Z. Normally, whatever the employer pays, CTC cost to the company minus Z. Special case, you write there, car. Car. Normally perquisite is P plus Q minus R. P plus Q plus minus R. You can give whatever notation you want, doesn't matter. P kedaga barri. P kedaga. If car owned by employer is owning the car and giving you. Because employer's car you are using. That's why you are getting a benefit of depreciation. Owned by employer, you write depreciation. You can interchange P and Q. Depreciation at 10% of OC. 10% of original cost. In a regular class, Q would have and P would have interchange. It doesn't matter. 10% of the original cost. If it is owned by the employer. Higher means higher charges. Next, Q. Actual running and maintenance expenses. R&M and the repairs and maintenance alla running and maintenance expense met by employer. In Nishita, running and maintenance expenses met by employer. Next, P plus Q plus R. P plus Q plus R I said, am I right? Plus R. R. P plus Q plus R, not minus R. P plus Q plus R. R means chauffeur. CHAFFEUR. Or drivers. Actual salary borne by employer, if any. So on the top you can written P plus Q plus R within the bracket minus Z you write. Z means amount recovered. Throughout the discussion I said Z means amount recovered from the employee. Understanding? Yeah, fine. So next, very important. When car given partly for official and partly for personal. When the car used partly for official and partly for personal. Partly for official, partly for personal. Listening? So, okay. Partly for official, partly for what? Personal. You write? It is easy to remember. Small a. Car owned by employer. R&M by employee less than 1.6 liters cc. Cubic capacity less than 1. Yeah. Car is owned by employer, no doubt. But expenses are met by employee and a small car, March 800. Less than 1.6 liters cc. Dash is equal to 600 per month. Next, second one. Same, ditto. Car owned by employer. Expense met by expense met by car owned by employer. Running expense met by employee. But CC greater than 1.6 is equal to 900 per month. Next, that you can write it as 1A, 1B. Next, 2A, car owned by employer. All the cases, car owned by employer. Car owned by employer. Expense met by employer. Now it is employer. Dash. CC less than or equal to 1.6. 1,800 per month. 2B. Car owned by employer. All the cases, car owned by employer. Running and maintenance expense met by employer. CC greater than 1.6. Toyota Innova. 2,400 per month. Make a box for this. All the 4 cases, car owned by employer, green ink box haki. Car should be owned by the employer for applying the 600, 900 category. So if the car is, look at me now. One sentence below that you write, one sentence below that. If car is owned by employee, perquisite is equal to P plus Q plus R. I'll leave 1 second. P beta. P is depreciation. Car is owned by Q plus R. In our present discussion, Q plus R minus Z, close the bracket, minus 1,800 bar 2,400 per month, depending on the CC. Slightly technical, is important, I'll explain. I gave in a simple format. One more note to write. If car owned by employee and expense are met by employee, completely below that, or would be GOR, car exclusively for official purpose, car exclusively for official purpose, for both you write with a flower bracket, right? No perquisite. How can there be perquisite here? My car expense met by me, there is no perquisite. Although it is only for official purpose, there cannot be a perquisite. So normally P plus Q plus R minus Z. If the car is owned by the employer, then the 600 etc. comes into picture. If car is owned by employer, 600 concept nahi hai. Car is owned by the employer, then expenses are met by me. I am an employee. Small car 600, big car 900. Then if the car is owned by the employer, expenses are also met by the employer. So the perquisite should be more. So 600, 1.5 is 900. Double karo, it will become 1,800 plus 600, 2,400. Meaning, car is owned by employer, expenses are met by employee. So it perquisite will be how much? 600 rupees per month. If it is a small car, big car 900. If the car is owned by the employer, expenses are also met by the employer, then the perquisite should be more, 1,800 rupees. If it is a small car, big car 2,400 per month. All of you understood? Fine. If the car is owned by employee, then all the amounts incurred by the employer you add. Minus, if it is small car, okay, 1,800 rupees. If it is a big car, 2,400 per month. Okay. So as if it has been used for partly. All these cases are only for partly official and partly personal. You written that, no? Partly official and partly personal. One note you write further. In the partly cases Supra, add 900 per month in all the cases. Small car, small driver, big car, big driver concept nahi hai. Driver is a driver. Kirti can also drive Toyota Innova. So Shetty sir also can drive Maruti 800. Ye no what both. I'll be sitting and driving, she'll be standing and driving, isn't it? Yeah. So add 900 per month in all the cases, in all the partly cases. Understood, my dear friends? Simple, beautiful notes. But please understand, you should have little knowledge about income tax before entering the revision class. If you don't have any knowledge about the revision class, income tax, how can I help you? I can't help it. Okay. So now, 1721 RFA, 1722 concessional RFA, 1723 specified employee 5 perquisites taxable. Car, we saw now, sweeper, watchman, etc., gas, electricity, etc., education facility provided, and transport facility. Almost all the cases, perquisite is equal to CTC minus Z. One extra point, right? Education facility for employees' children. 2 RMRs. Education allowance education allowance, 10 within bracket 14. Read with rule 2BB. Exempt huge amount. How much is the amount? Huge. Exempt up to rupees 100 per month. Jujube. 100 per month per child. Max 2 children. If you have got triplets, first issue only triplets, only 2 children you will get. Third child will not. Understanding? Yeah. One. You know, fine. Anybody is having a network issue, etc., you may also watch through YouTube. It is happening in YouTube also. Fine. So moving on. I said what? Yeah. Fine. And rupees 100 per month per child up to a maximum of 2 children. Understanding? Right side. Right side. That is exempted. I said exempted. Did you use the word exempted? Exempt. Right side. Educational facility. Important. Very important. Educational facility. Say free education. Perquisite is equal to CTC minus Z. CTC minus Z. Below that, here CTC, comma, out of own source. Vijaya College lecturer, his son is studying in Vijaya College, out of own source. CTC out of own source. Perquisite is equal to cost of such education. Cost of such education in the same or nearby locality. So Vijaya College means you have to go to Jain College. Comparison. Full stop. Only for own source. Again, I'm saying only for own source. Own source. Supra. Supra means as above. No perquisite. No perquisite. If cost is less than or equal to, use that symbol, less than or equal to 1000 per month per child. 1000 per month per child, which is the bracket, any number of children. Here no restriction. But still be within family planning chart. Don't go beyond that. So exemption for allowance is, education allowance is exempt. How much? 100 per month for 2 children. Education facility is fully taxable. Only if it is a own source. I repeat, if it is only own source, then you have to go by the nearby institute and find out. And if it is less than 1000 per month per child, it is exempted. Below that example, Tata Limited employee, son studying in Vijaya College, cost borne by employer 9,000 per annum. Dash red, fully taxable because it is not own source. Tata Limited is not the employer. Understanding? Yeah. Next. Right side arrow mark. What is right side arrow mark? Not right side. Sorry, one more example you write there. Okay. Just 1 second. Yeah, fine. So what are that? Sorry. You write Vijaya College lecturer. So you write, if above is the case of Vijaya College lecturer's son studying, above is the case of Vijaya College lecturer's son studying, fully exempt. Understood? Yeah, fine. So perquisite I am defining, very important. 1721 RFA, 1722 concessional RFA, 1723 is what? Benefit provided to the specified employee. 1724 is important. Employee's obligation met by the employer. So if you look at the example on the left side, you can see the chart table there. Employer appoints the maid, it is 1723. If employee himself appoint the maid in his house and the employer reimburses 1724, it is taxable in the hands of all employees. All employees. Fine. Next, contribution to any fund for assurance, it is fully taxable. 1726 is ESOP, etc. Fair market value minus Z. Fair market value of their shares will be taxable minus Z. Then any contribution made by the employer towards approved SAF, superannuation fund, anything above 1.5 lakh, excess is taxable. The word used is excess. 1.6 lakh means only 10,000 taxable. Any other fringe benefits, normally CTC minus Z is taxable. There you take care of it. Or if you want, you can make a note of it. Free food, when the free food is given, up to rupees 50 per meal is exempt. That means if 52 rupees is given, 2 rupees taxable. One more point, gift in kind. Be careful. Gift in kind, 4,999 is exempt. Gift in kind, 4,999 is exempt. 5,000 or above, fully taxable. That is the dangerous point. 5,000 or above is fully taxable. Please be careful. Food, if it is 52 rupees, 2 rupees papad given, 2 rupees taxable. Whereas gift in kind, 5,000 worth watch given, fully taxable. Full stop. Further, cash gift even 200 rupees fully taxable. समझ में आ रहा है? Yeah. Fine. Continue. Next. So below that there is a proviso, no perquisite for reimbursement of telephone and medical expense. Telephone expense anyway comes under Rule 3, and we are covered here only. Okay, so Rule 3 proviso, and medical perquisites are given under 17(2) proviso. Medical, if it is the own hospital of Atava medical insurance premium, etc., exempted. Otherwise, everything is fully taxable. Own hospital, Atava government recognized hospital, if you are giving a facility, it is exempted. And if you are taking a medical treatment outside India, so travel expenses is exempted only if the gross total income is less than or equal to 2 lakh. Medical and stay expenses exempt up to permission given by RBI. 17 subsection 3 defines profits in lieu of salary. So instead of salary, like when you lose the employment, you have been thrown out of the employment, Keyman insurance policy if you received, any contribution out of the URPF, etc., will be considered as a 17(3). 1010CC is a very important section. 1010C talks about VRS, exemption up to rupees 5 lakh. 1010CC is on the non-monetary perquisite provided to the employee. If the employer bears the tax is exempted. I repeat, Kirti is my employee. I give her 6 lakh cash salary, 4 lakh kind salary. On entire 10 lakh, if I pay the tax, let's say 1 lakh, tax on that 4 lakh rupees, okay, that 40,000 rupees, assuming, okay, is exempt in her hand, but not allowed as reduction for employer. Tax on non-monetary perquisite provided to the employee shall be exempted. So 6 lakh cash salary fully taxable in her hand, 4 lakh perquisite fully taxable in her hand. On this 10 lakh, let us assume 1 lakh is the salary I only pay as an employer. So 1 lakh divided by 10 lakh, 10% aayega. So on 6 lakh, 60,000 rupees is fully taxable. On 4 lakh kind perquisite what I have given, 40,000 will be exempt in her hand. Section 1010CC. Come down. Now let us look into some, come down, retirement benefits. 1010, 1010A and 1010AA talks about the retirement benefit. Gratuity, then commutation of pension and encashment award leave. For government employee, fully exempt. If it received at the time of retirement or after the retirement. If it is a non-government employee, exemption is as under. Gratuity leads to the following, 2 RMRs. So if you are covered by payment of gratuity act of 1972, 15 days salary for each year of complete service or part thereof in excess of 6 months based on last salary drawn. Whereas if you are not covered, you are covered half months. So I repeat, all the 3 cases, gratuity, commutation of pension and earned leave, all the 3 cases, government employee fully exempted. if you receive at the time of retirement or after retirement. If you receive anything while in service, fully taxable. Understanding? Fully taxable. Understanding? Fine. Now, gratuity is concerned. You are covered by POGA, not by covered by POGA. Least of the following is exempt. Only first point is different. Second point is actual gratuity received. Third point is 20 lakh rupees. What the first point? If you are covered by POGA, take the last salary drawn into 15 by 26 days into, if you worked for 30 years, 7 months, multiply by 31 years. If you worked for 30 years, 6 months or 5 months, multiply by 30 years. Whereas if you are not covered by POGA, take the average salary of last 10 months into 1 by 2 into 30 years only, irrespective of number of months. Understood? Next, pension. Pension is always taxable as salary, no exemption. If you commute pension, instead of receiving monthly 6,000 rupees, you commute and get 4 lakh rupees. Then the law says, if you also receive gratuity, you're a rich fellow, exemption is 1/3 of the full value. 1/3 of what? Full value. If you do not receive gratuity, exemption is half of full value. Government employee, any fully exempted. 1010 AA, earned leave. So government employee fully exempted, non-government employee 4 conditions. Whatever the leave at the credit of the employee based on the average salary, so you have to consider, but leave in excess of 30 days is completely ignored. Second one, actual received normal, statute limit of 3 lakh. Fourth point is whatever the average salary into 10 times. So there are 4 conditions. Unlike most of the cases, we have 3 conditions. 1011, SPF and PPF is totally exempted. 1012, RPF totally exempted whenever you receive. 1013, come down. So allowances are of 2 categories. One is HRA, one is special allowance. HRA, there is no concept of government, non-government. HRA for everyone. Note board kode. 1013A exemption for every employee, government या non-government. Least of the following is exempt. What is that? Rent paid minus 10% of salary, 40% of the salary if you are in non-BCDM, Bombay, Calcutta, Delhi, Madras, 50%, then actual HR received. That you can go through. So, but HRA, be careful, it's for government and non-government, same rule. Fine. Then go to the definition of salary also. Salary means basic pay, DA if taken for retirement benefit, plus commission if it is a fixed percentage of turnover. Next, special allowances given under section 1014, 2 RMRs. City official allowance. City hardu, okay, unspent amount is taxable. Are you listening? City hardu, unspent amount is taxable. So conveyance allowance, traveling allowance, helper allowance, academic allowance, daily allowance on transfer, uniform allowance. So all this will be taxable. Are you listening? All this will be taxable. Okay, only if it is unspent. For example, uniform allowance. If the employer gives you 10,000 rupees, spent 8,000 rupees, 2,000 is taxable. Understanding? Whereas if it is a personal allowance, okay, there are some specific. So they said, if you are a children education allowance, I said 100 per month per child, hostel allowance 300 per month per child, transport allowance for orthopedically handicapped or blind 3,200. Whereas otherwise, others transport allowance nahi milega. Next, come down. 1010B, retrenchment compensation. Yeah. It is a actual amount received, amount prescribed under the what you called Industrial Disputes Act 1947 or 5 lakh, whichever is less. 1010C again, retrenchment compensation, VRS compensation, actual amount received, then completed year of service, how many years is service, into 3 times, into last salary drawn, or balance of service left out into last salary drawn, whichever less, and again, actual amount received, whichever is less. You have to go through that slabs. 10.5, LTC, leave travel concession, twice in a block of 4 years will be exempted only for travel expense, nothing else. And the present block is 2018 to 2021. Then rounding off, total income and total tax, both will be rounded off to the nearest 10 under 288A and 288B. Reasonably understood? So come to page number 23, Sandhya. Fully down. Down. Yeah, stuck. So in addition to this, some general points which we are not covered there because we could not insert in the table. Total income is equal to that printing correction GTI, gross total income should be together, minus deduction under chapter 6A. Minus income I already discussed. Special income means the tax rates are prescribed in the Income Tax Act itself. Normal income is normally given in Finance Act every year. Tax rates go through, all of you know this. Individual HF, AOP, etc. That 5 categories. Up to 2.5 lakh, no tax. 2.5 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. About 10 lakh, 30%. If you're a resident senior citizen, very important, you can add that word resident. Resident 60 years and above, even if your birthday is on 1st of April, on 31st March itself will attain 60 years. So resident senior citizen, it is a 3 lakh is the limit. Whereas if it's resident super senior citizen, resident word has to be added there, up to 5 lakh rupees, no tax. Then very important surcharge. Surcharge rates are extremely crucial. Up to 50 lakh rupees, there is no surcharge. If it is above 50 lakh, it is 10%. Above 1 crore, 15%. Above 2 crore, very important. Above 2 crore, 25%. Above 5 crore, 37%. One special point you note it down somewhere there only. However, for 111A and 112A, all of read down. I'll be discussing that later. 111A and 112A. No surcharge, 111A and 112A. Maximum surcharge 15%. Maximum surcharge 15%. Example, Tushar, only income 112A, 4 crores. Surcharge 15%. Example 2, Sandhya Shri, salary income 40 lakh. 111A, 50 lakh. Total 90 lakh. Surcharge for both 10%. Because maximum 15% I said. If it is calling under 10%, 50 lakh to 100 lakh, how much you get? 10%. Don't go 15% directly. Maximum I said. Did you hear? So next, one more example. Sudiksha, house property income 160 lakh. 111A, 100 lakh. For both 15%. Why you tell me? So house property is 1 crore to 2 crores. 1 crore to 2 crores, kitna percentage hai? 15%. And for this maximum is only 15%. I hope you understood. Yeah, next. Rakshita, salary income 220 lakh. Dash rate, surcharge 25%. And 111 income 8 crores. 15% surcharge. Important. समझ में आ गया सबको? Yeah, fine. Partnership firm, tax rate is local authority, it is 30%, and surcharge except individual HF, etc. For everybody, surcharge comes only after 1 crore. Total income. 1 crore is the total income. For domestic company, very important, if the turnover, very important, turnover in previous year 17-18, you have to see that baby ko base pasand hai. 17-18, if it is less than or equal to 400 crore, apply 25%, else it is a 30%. We have some other sections, 115 BAA, 115 BB, CA final syllabus. You don't have to bother. Up to 400 crore turnover in 17-18. This year, 19-20 ka tax rate is 25%. So I take 17-18 as a base and apply the tax rate now. Whereas if it is more than that, you have to go by 30%. Foreign company, straight away it is 40%. Cooperative society, no basic exemption limit. Up to 10,000, 10%. So up to 20,000, 20%, 10,000, 20,000, then above that 30%. Come down. The surcharge table, please go through again. Come down. Yeah. So individual HF, I said, okay, very important surcharge table. I told 111 and 112 special case. And for most of them, above 1 crore rupees, it is 12%. Domestic company, above 1 crore up to 10 crore, 7%. Foreign company, 12%. May not be relevant because company taxation may not be asked. But surcharge, you still remember. Come down. Partial integration, I've already told you. Okay, steps. Next. So point number 7, employees contribution to PF, etc. First it will be added to income under 22410. Then when they pay within the due date, it's allowed. Okay, fine. Due date, ಅಲ್ಲಿ correction ಮಾಡ್ಕೊಳ್ಳಿ. Point number C, PF and SI both now 15th of next month. 15th of next month. Next, what is key man insurance policy? Key man means important person. When an important person are listening, if you take a life insurance policy, that's called key man. If employer receives the money, it is a business income. Employer receives the money, it is income from salary. If any other person receives income from other source, like a non-employee director, income from other source. Come down. Conditions for taxing income under the head salary, there should be employer-employer relationship. Advance salary is taxable on receipt basis. Arrears as and when you receive. Fine. When you forego salary, it is taxable. But when you surrender to the central government under section 2 of the voluntary surrender of salaries exemption from taxation act, it is exempted. Next one. Come down. These are all general points. NSC, when you purchase NSC, in that year it is ETC eligible. And if it is NSC 6th issue, first 5 years, interest what you earn added to the income from other source, then deduction. Whereas 6th year, you have to add only income because 6th year you are not going to reinvest the same. So 1st year to 5th year you are reinvesting, you will get a ETC. Come down. Yeah. Fine. So this we'll discuss later. Yeah. Now I'll be giving a break. Okay. 15 minutes you have a break. Sharp 15 minutes you can come back. Okay. So thank you. Aditi, you can put that screen bubble. Ready? I'm audible, Kirti? Yeah, Sandhya, start ma. Yeah. ನೋಡಿ, ಡಾಕ್ಟರ್ ಹ್ಯಾಸ್ ಟೋಲ್ಡ್ ಹೊರಡಿಂದ ಏನು ತಿನ್ಬಾರ್ದಂತ, ಅದಕ್ಕೆ ಒಳಗೆ ಹೋಗಿ ತಿಂತಾ ಇದೆ ಅಳಿಲು, ಸ್ಕ್ವಿರಲ್. ಯು ಶುಡ್ ನಾಟ್, ಸೊ ಯು ಶುಡ್ ನಾಟ್ eat anything from outside, no? That's why it's going inside and eating. Like most of us will say, no, I don't eat outside food. That's why I get the hotel food and eat inside the house anta. Yeah. Next one. Yeah. So people say, what is there in the name? Look at this. Mukesh and Anil. If you are aware, Mukesh is Ambani and Anil Ambani. Mukesh is very rich. Anil is almost into bankruptcy. Okay. So name only. So parents would have kept the name accordingly. Mukesh hai, then Anil. Nothing is there. They say what is there in the name. Isn't it? Yeah. Okay. With this, let us continue our discussion. Okay. So till now, we discussed about the introduction and salary chapter. So now let us get into the problem areas. Come down, ma, heroine. So certain questions. Normally, accounts, etc., we go by old questions. But income tax is a risk to take old questions because the amendments have happened, taking old questions. That's why we'll go by our own beloved institute material mainly and compilation of the same. And RTP at the last session I'll be discussing. Fine. So we'll be going little faster as per as some easy questions are concerned. Let's not waste our time. So, Kirti, can I allow you to unmute? Is it possible? Can you unmute, Kirti? Yeah.
Yes, sir.
Okay. Read the question.
Explain the concept of marginal relief under the Income Tax Act 1961.
Statute. So, it is basically a concept where just because of the surcharge, your additional tax payable should not be more than additional income. Let's take an example. A company, 100 lakh income, it pays say 30 lakh tax. When the income is 101 lakh, they earn 1 lakh extra. For earning 1 lakh extra, if they are made to pay 2 lakh rupees additional tax, is meaningless. So whenever your additional income tax is more than the additional income, the extra amount you don't have to pay, that is what is called marginal relief. So this comes only because of the surcharge concept. Why it's happening, Mahati? Because so if up to 50 lakh individual, there is no surcharge. If it is 50.20 lakh, surcharge is applicable from rupee 1 tax. It is not only on 20,000 rupees. That's why they say extra income, whatever additional income you earned, additional tax, if it is more than the additional income, let's say 1 lakh is additional income and additional tax is 1,40,000, you have to pay only additional tax of 1,40,000 is given as a marginal relief. Come down. So for Mr. B, there's a marginal relief computation there, beautiful calculation. Come down. So his total income is 101 lakh individual. So what do? Compute the not tax payable including surcharge on 101 lakh. It comes to this calculation, you can do it up to 2.5 lakh. All of you know this, alva. So you do this. It comes to 3268. Tax payable on total income of 1 crore. Assuming it is only 1 crore, 100 lakh. It would have been 30 lakh 93. That means excess tax payable is 175. Understand carefully. Whereas your extra income is only 1 lakh. That's 75,125. You don't have to pay. That will be considered as a marginal relief. Atava. When income is slightly above that, what is your tax on 1 crore? 30 lakh 93,750. Additional income tax, additional income earned is 1 lakh. Add that. That comes to 31,93,750. I said there are two ways of doing it. I discussed in the regular class for the benefit of my new viewers. One is go by this step. Compute the tax including surcharge. Then compute the tax on 100 lakh because above 100 lakh surcharge rates is going to be increased. It should have come to 3093. Are listening? So differential amount is excess tax payable and extra income earned is only 1 lakh. So relief is 75,125. Or whatever the tax 3093,750 plus extra income is 1 lakh. Add karo. It will become 3193,750. Then apart from that, I told you when you're working on the problems, go to the definitions of SSC, etc., which you discussed already. One last point, application of income versus, am I too fast? Revision class, I will not be too slow because it's a revision class. First vision irbeku. Vision illa and revision model. I'm sure all of you are able to catch. All of you are able to catch reaction? Okay, right. So diversion of income versus application. At the source itself, before even right to receive arises, Mati, if you transfer that right, they're called diversion. So Jitta and Paul X-Ray Private Limited, Allahabad case where father told his son, I'll transfer the business to you provided whatever you are going to earn tomorrow, 30% you have to give to mother. So before even he started earning income, he had an obligation to pass 30% to his mother. Diversion, it is not taxable in the hands of transferor. Application, Jayant is having 10 lakh rupees salary income. Moment he has got 10 lakh income, he'll have girlfriend. Without income, no girlfriend will come. So out of 10 lakh, he gives 3 lakh rupees to his girlfriend. That is the application of income. Law says first you pay the tax to me on 10 lakh, then you do whatever with your girlfriend. I don't care. So that's why application is always taxable. Down. Yeah. Each beautifully drafted material where, who knows, 3 sessions you attend, you may get 50 marks out of 60 marks if you practice all these things in the next 3 days. Okay. So residential status. That is anyhow. I'll not get into the calculation part. Odama, question Odama, Kirti Garu. You cannot unmute? Yeah, do it.
Yes, sir.
Yeah.
Mr. Ram, an Indian citizen, left India on 22 September 2017 for the first time to work as an officer of a company in Germany. Determine the residential status of Ram for the assessment year.
So this is important. An Indian citizen leaving India for employment abroad. So condition is 60 days or 182 days?
60 days.
182 days. 60 days ki exception. He's an Indian citizen leaving India for employment abroad. It comes as what? Exception. So he should have stayed in India for 182 days. So calculate. So if you see September actually, if you complete only, it will come around 180 days. It is lesser than 180 days. So you have to calculate the number of days. April, May, etc. It comes to 175 days. He is a non-resident. So it is an exception. I told you to write down somewhere. Normally 60 days, but you are leaving India for employment abroad, Mati. It is an exception. Come down. You should know the law. Next question is about, okay. So a government employee in the Ministry of External Affairs left India for the first time due to his transfer to High Commission of Canada. That is basically, let's say, Indian Embassy. What are the incomes which are taxable? Salary is already computed. That means you should not give 50,000 again. Okay. Keep your notes ready. Observe the language. Say 2 RMRs. Salary earned 5 lakh. Give standard deduction 50,000. 16, which is the bracket 1A. Your speed should be very good. Exam is fast approaching. Not for my sake. 3 hours you have to complete their paper. Improve the speed. Your speed is a cumulative factor of your learning, thinking, application, and writing. Everything should be together. My objective is not to make my name big. I want your name big. Okay, by adding CA to your names. So I can make it very simple, easy topics I can teach in 10 hours and close. But I want your speed should be improved. Take care of that. Yeah. So I said what? Give 50,000 reduction. Right side. Salary computed 5 lakh. Computed. They have only given. No 50,000 further. They have already done it. Observe the language. Samajh mein aa raha hai? Next line. Similarly, Yarali. Yeah. Interest received 9 lakh means income is equal to 9 lakh by 90 into 100. Income is equal to 9 lakh by Sharanya 9 lakh by 90 into 100 is to 10 lakh because the word used is received. Next, interest income earned 1 lakh or 10 lakh. Interest income earned 10 lakh. Income is equal to 10 lakh. Artha aita devrige. Received andre you have to gross up. Earned andre no grossing up. So illi salary it has to be taxable. So be careful. He is residing outside India. Yes, left for the first time on 31st March. Look at it. The entire 1920 is outside India. He's a non-resident. But even for a non-resident, salary earned from an Indian government, 913, I said 913, salary for an Indian government is taxable always in India. But foreign allowances, etc., there is an exemption under section 1017. There is an exemption to them, 107. So then interest on fixed deposit in India, taxable. Agriculture income in Pakistan, it is actually income, but since it's a non-resident, it may not be taxable. House property also outside India. Come down. Look at the, come down. Story they are given. You have to give the story also why it is taxable. I said salary is taxable, but 10.7 gives exemption for perquisites and allowance outside India. So only two incomes are taxable. Why? Salary is taxable, income from other source in India. Pakistan agriculture income is income, but he is a non-resident, hence it is not taxable. समझ में आ रहा है? Ali bekare barcode side by side. Throughout the year, outside India, hence non-resident. It is all there. It is all there. Next. Therefore, only Indian income is taxable. However, salary from Canada, salary earned in Canada, deemed to be earned in India, 913. Next, come down. So again, Mr. Day residing in India. So you have to apply this, your conditions. Yaudo 60 days, 182 days conditions, etc. You have to apply. And then that to be called R but NOR, last 10 years you should have been non-resident at least for 9 years. Atava, last 7 years you should have stayed for 729 days or less. 729 days out, remember easily. It is a 2 years, 365 days in a year. Into 2, it comes to 730. They're trying to say you should have stayed for less than 2 years. Apply that. Next, come down. That you do the number of days. I hope you can do it. Can alva? Yeah. Come down. Now, this question is about if he is R and OR, R but NOR, NR. So, what are the incomes taxable? So, short-term capital gain on sale of Indian company, shares of Indian company received in Germany. Received where? R and OR, everything is taxable. Correct? R but NOR, listening? It is not taxable because it is received at the earned outside India. Dividend from Japanese company received in Japan, only first case. Rent from property in London, deposit in a bank in London. Okay, later on remitted. Receipt means first receipt. First, if you receive in London and then you remit to India, it is not received in India. Very important, rent, it is not computed. Be careful. 75,000 minus 30% standard action you should give. Be careful. This is the language I was telling you. 75,000 rent received. So make a note of it, all those pointers. Rent received minus 30% standard action. Then it is taxable only in first case. Dividend from RP Limited, an Indian company. So wherever you receive, it is taxable because received in India is taxable. 914, dividend paid by an Indian company outside India is also taxable. That is all the 3 cases. Agriculture income from land in Gujarat. Agriculture income is in your exempt under section 10.1. Come down. Yeah. So whatever I said, that they have shown there, that rental income 75,000 minus 30%. Look at that. Very important. Are you there? And the dividend is the income, but it is exempt up to rupees 10 lakh, 1034. That is also you have to take care. Is it all right? You want me to solve the question or this explanation is enough? You can sit and solve, no? Yeah. If I only solve, then I only have to write the exam. Yeah. Come down. What is? Okay. Vivita paid a sum of rupees 5,000 USD to Mr. Kulshekar, a management consultant, practicing in Colombo. Colombo is in Sri Lanka, not in India. Specializing in project financing. The payment was made to a non-resident. Consultancy related to project in India. So this is a section 9. Income from India. So is it a what do you call the royalty fees for technical service? You should understand. Royalty means for using an asset you are paying something. Fees for technical services, any technical consultancy, any consultancy, management consultancy, MCS, management services, consultancy services, and services given in any field will be covered. So this is a fees for technical service. It comes under 9.1 clause 7, 917, 917 the FTS. Deemed to accrue errors in India, taxable. 915 is interest. 916 is royalty. Barcode. 915 is interest. 916 is royalty. 917 is what? FTS. Royalty pakabari. Royalty does not include capital gains. If you sell the asset, it is not a royalty, it is a capital gain. Out of the asset, if you earn something, that's going to be royalty. Arthakta idea. Sharanya Trambake Devi. Next.
Yes, sir.
Yeah. So FTS does not include salary income. FTS does not include salary income. Come down, ma. Yeah. Okay. So, Vodama, question, Sharanya.
An individual who is an Indian resident is allowed to hold two different citizenships simultaneously. Is the citizenship a determining factor for residential status of an individual?
What did I say? Residential status and citizenship, no connection. Except in the two cases, 60 days exceptions. Normally, no. 60 days exception, consider.
Yes, sir.
Next, come down. I'm giving only the jalak. Down. The financial year 1920 anta ಮಾಡಿ. So, little up, yeah. 1920 anta ಮಾಡಿ. Okay. So, taxable or not? First point, Odama.
Rupees 5 lakhs received from an Indian domestic company for providing technical know-how in India.
So, once it comes under 9, it is taxable in all the hands because earned is equal to deemed to be earned. Fully taxable. FTS 917. Next.
Rupees 6 lakh from an Indian firm for conducting the feasibility study for the new project in Finland. The payment for the same was made in Finland.
So, it is earned and received in Finland. You just look at the answer there. Just they given the explanation there, hopefully. Yeah. So, conducting the physical study for the new project not taxable in India because income is earned in Finland, received also in Finland. They have given very categorically. Hence, it is not taxable. Go back, ma, heroine. And please remember, these are all non-resident cases. The top US-based company, Haley Limited. Haley Limited. Non-resident. If it's taxable only if it is a OM is in India. Next, Odama.
Rupees 4 lakhs from a non-resident for use of patent for a business in India.
See how important is this 916? Use of asset, royalty, taxable. Next.
8 lakhs from a non-resident Indian for use of know-how for a business in Singapore. Such amount was received in
using
use.
that money outside India. How can it be taxable in India? And amount is received outside India. So it is not taxable. Next.
Rupees 10 lakhs for supply of manuals and designs for the business to be established in Singapore. No payment was for the same was made in India.
I think it's very clear. It is not taxable. Neither received in India nor earned in India. Simple. To be all of you. Incomes to be chargeable in India for a non-resident. Non-resident as I don't discuss. Non-resident. They should be either received in India or earned in India or deemed to be received. Section 7. Come down, Sandhya, come down. Deemed to be received, down. Section 7 or deemed to be earned, still down. Deemed to be earned in India. Section 9. Section 9 important. Go through. Come down, ma. Next question. Yeah. So this is a chart we have given about the residential status. Section 9 is deemed to occur in India, deemed to be received in Section 7. Come down. Just to recall. Come down. Yeah. So this one question specifically, you can just glance it. This is specific amendment happened 2 years back. That's why they had. Sikkim, if suppose that person is earning any income, it is exempt under 1026 AAA, AAA. May not be relevant. 1018 is about basically that Paramavir Chakra, etc. Okay. Pakara, okay. Paramavir Chakra, short, Pakara, Pekara, Adala, okay. Exemption. So the last one is about HF. Exemptions, at least short of exemptions. Aramar Sakya, 1 by 1. 10 within bracket 1. Fully exempt agriculture income in India. Correct?
Yes, sir.
Video second arrow mark. Yeah. Second arrow mark. 10 to 10 which is the bracket. Only print agide ನೋಡಿ last one. 10 to share of any income from HF. HF in the any income received is exempt. Any income. Next third one. ಅದೇ section 10 to A ಅಂತ ಬರೀ 10 to ಬರ್ತವೆ 2 ಆದ್ಮೇಲೆ capital A 10 to A. Share of profit income ಅಲ್ಲ share of profit underline profit received by partner from PFAS. Share of profit received by partner from PFAS. Correct?
Yes, sir.
Next, I'm trying to give some important sections. 10.5 LTC. 10.7 allowances and perquisite for Indian citizen outside India. We saw that now. ಎಲ್ಲ ರಿಪಿಟೇಷನ್ ಆಗ್ತಾ ಇದೆ. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ?
Yes, sir.
ಒಳ್ಳೆ ಕೆಲಸ. ನೆಕ್ಸ್ಟ್ 10.10 DCRG ಡೆತ್ ಕಮ್ ರಿಟೈರ್ಮೆಂಟ್ ಗ್ರಾಚ್ಯುಟಿ ಟೈಮ್. ನೆಕ್ಸ್ಟ್ 10.10A Mahati 10 within the bracket 10A 10 within the bracket 10 capital A. ఏమండి మహతి గారు?
ఏమీ లేదు సార్.
10.10A what? Commutation of pension. Pension ಅಲ್ಲ, not pension. ಕಮ್ಮು ಡಾರ್ಲಿಂಗ್ ಕಮ್ಮು ಹತ್ರ ಬಂದ್ರೆ ಕೆಮ್ಮು ದೆನ್ ಹಾಸ್ಪಿಟಲ್ಗೆ ಹೋಗಿ ಅಡ್ಮಿಟ್ ಆಗ್ಬೇಕು. 10.10A what? Commutation of pension. Revision class, that's I'm not going for too many jokes. Syllabus cover ಆಗ್ಬೇಕಲ್ಲ. November exam ಆದ್ಮೇಲೆ will have joke section only. Okay, 10.10A computation of pension. 10.10AA ಏನು? Earned leave. EARNED earned leave. Encashment of earned leave. ಅದು earned leave encashment. ಆ 10.10A 10.10A ಕರೆಕ್ಷನ್ ಮಾಡ್ಬಿಟ್ಟು ಗವರ್ಮೆಂಟ್ ಎಂಪ್ಲಾಯಿ ಫುಲ್ಲಿ ಎಕ್ಸಾಮ್ಡ್ at the time of retirement or after retirement. 100 times I told in the class. ನೆನಪಿದೆಯಾ?
Yes, sir.
Fine. Somewhere February, March all ಆಗಿದ್ದು, but still you recall. Good, not bad. Next 10.11 10.12 10.13 PPF SPF. 10.11 is PPF and SPF. 10.12 is approved, 10.12 is RPF. 10.13 is what? ASAFE, approved superannuation fund. Amount received at the time of that, whatever amount received, exempted. Next 10.13A HRA for any employee, government and garment, ಎಲ್ರಿಗೂ ಸೇಮ್. Are you there?
Yes, sir.
Yes, sir.
Then 10.32 10.15 ಎಲ್ಲ ಇದೆ, ಇಟ್ಸ್ ಓಕೆ. 10.32 ಯಾರಿಗೆ? Parent of minor 1500 per minor child. 10.34 last year, next year in the line. 10.34 dividend from domestic company up to 10 lakh. Correct alva?
Yes, sir.
Within the bracket 115 ಬಂದ್ಬಿಡಿ 115 BBDA ಅಲ್ಲಾಡ್ಸಿ 115 BBDA 115 BBDA excess of 10 lakh tax that 10%. Excess ಅಂದ್ರೆ excess. Understanding?
Yes, sir.
Yes, sir.
10.35 mutual fund income from, one second, dividend is 10.34. 10.35 income from units of mutual fund etc. UTI mutual fund ಎಲ್ಲ ಬರುತ್ತೆ. Next 10.37 ಏನು 10.37 compulsory acquisition of agricultural land. Compulsory acquisition of agricultural land. Some conditions there. 10.37 ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ?
Yes, sir.
Yes, sir.
Enough. ಸಾಕು. ಸೊ ನೆನಪಿಟ್ಕೊಳ್ಳಿ, ಇಂಪಾರ್ಟೆಂಟ್ ಎಕ್ಸಾಮಿನೇಷನ್ ಸೆಕ್ಷನ್. ಕಮ್ ಡೌನ್ ಮಾ. ಸಂಧ್ಯಾ, ಕಮ್ ಡೌನ್. This is an important section, 10AA. Okay, so all of you write down 10AA for new unit in SCZ. All of you write down new unit in SCZ. Commenced from 1/4/2006 till 31st March 2021. Eligible profit of new SCZ unit. Profit is equal to total profit of the business into export turnover received in CFE, export turnover received in convertible foreign exchange within September 30th of AY. They use the word 6 months from the end of the relevant previous year. 30th September ಆಗತ್ತೆ. ಗೊತ್ತಾಗ್ತಾ ಇದೆಯಾ? What date you sell is not relevant. 30th September ಒಳಗೆ ಬರಬೇಕು. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ?
Yes, sir.
Within 30th September of AY. Within 30th September of AY divided by total turnover. So profits of the business, I think there is some network issue, into export turnover received in convertible foreign exchange within 30th September of AY divided by total turnover. Understanding? Total
Yes, sir.
turnover. Just a sec. Yeah. Total turnover. Then one second. Deduction is important. This is, that's why I'm spending little extra time. Deduction is for 15 years. 3 RMRs. First 5 years. ಅಲ್ಲಿ ಮೇಲೆ ಪ್ರಾಫಿಟ್ಸ್ ಅಂತ ಪ್ರಾಫಿಟ್ ಇಸ್ ಈಕ್ವಲ್ ಟು ಬರೋದಲ್ವಾ, ಅದಕ್ಕೆ ಎಕ್ಸ್ ಅಂತ ಬರಿ. ಪ್ರಾಫಿಟ್ ಇಸ್ ಈಕ್ವಲ್ ಟು ಬರೋದನ್ನ ಎಕ್ಸ್ ಅಂತ ಬರಿ. ಓಕೆನಾ? ಸೊ ನಾವು ಯು ರೈಟ್ ಡಿಡಕ್ಷನ್ ಇಸ್ ಫಾರ್ 15 years 3 RMRs. For first 5 years, how much? ಮಾತಿಗಾರು 100% of X. ನೀವು ಹೇಳಿ ಸರ್, ನಾನೇನ ಕೇಳ್ತೀನಿ ಅಂತ ಹೇಳಿ. 100% of X. Second RMRs. For next 5 years, ಕೀರ್ತಿ ಎಷ್ಟ? For next 5 years, 50% of X. ನೀನು ಹೇಳಿದೇನೆ? Third RMR. For the last 5 years, so it is a block of 15 years. For the last 5 years, you write 50% of X, or Manisha, you know, SCZ reinvestment allowance created, whichever is less. Whichever is less. So first 5 years ಗೆ 100% ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಿ, ಪ್ರಾಫಿಟ್ಸ್ ಇಂಟು ಎಕ್ಸ್ಪೋರ್ಟ್ ಟರ್ನೋವರ್ ಬೈ ಟೋಟಲ್ ಟರ್ನೋವರ್. ನೆಕ್ಸ್ಟ್ 5 years ಗೆ 50%. ಥರ್ಡ್ ಗೆ 50% or reserve, whichever you create, whichever is less. Understanding? Next line. In the given case, case 1, okay, Rudra Limited, sorry, in the given case, I'm sorry, Rudra Limited X is equal to, I'll note board 80 lakh into, Ali, be careful, export sales should be received in convertible foreign exchange. If it is not convertible in foreign exchange, it will be added to the total turnover. Export turnover barbardo. Look at me. 460 lakh is export turnover. Rudra Limited. Can't say, yeah? Hello? Yeah. So, Rudra Limited. So, they said, SEZ and other unit of domestic. DTA is the second one. DTA exemption sigodilla. So, they said, Rudra Limited has 460 lakh rupees export sales. You are able to see 80 lakh. These export sales should be received in convertible foreign exchange within 6 months. If it is not received, you remove from the export sales, add to the total sales. So, answer X is equal to 80 lakh into 460 lakh. Illa, Onisha, I think, can you go up little up? Correct. So 460 unit. So Rudra Limited is a company as a whole. Otherly unit is they are given. So export sales will be only right. 80 lakh into 460 minus 160 because it is also included there. Important. Just be online. Second. ಕೆಳಗೆ ಬಾಬಾ ಸ್ವಲ್ಪ ಆನ್ಸರ್ಗೆ you should give you do one thing. Sadhya. Yeah. Okay. So just go back. I think the calculations. Go back. You're able to hear me? There is some disturbance. Okay, right. Yeah. You do one thing. Whatever you wrote, you strike off. I think there's some network issue. Strike off and rewrite. I will tell you. Add on. Second column in the table is for the company as a whole, which includes figures relating to DTA unit. Figures relating to DTA unit. Therefore, profit of SEZ unit is equal to 80 lakh minus 20 lakh, 60 lakh. Export sales is equal to 460 minus 160 is equal to 300 lakh. Total sales is equal to 600 minus 200. I'm audible? 600 minus 200 is equal to 400 lakh. Therefore, X is equal to 60 lakh into 300 by 400. Arthakta idea? 60 lakh into 300 by 400 is equal to 45 lakh. Two RMRs. Unit setup in 2012. Unit setup on 22nd May 2012. Kota road, Kochanalli, 2012. Below the date, previous year 1920. Previous year 1920. Look at me. So they said first 5 years 12, 13, 14, 15, 16, 17, 18, 19, 20. That means you are in the 8th year. Below it, right? It is the 8th year. 8th year. Therefore, deduction is equal to 50% of 45 lakh. Am I right? It comes in the second block of 5 years. Right side, unit setup on 14/5/2016 falls in first 5 years block. 16 to 19 only 3 years hardly. ಗೊತ್ತಾಗ್ತಾ ಇದೆಯಾ? So we are the fourth year effectively. Fourth year. Therefore, x is equal to 100%. Sorry, deduction is equal to 100% of x. Understood? Understood? Yeah. Okay. Correct, Bani. Sak. But story, Bari, write some theory. You can see the answer, ma. Come down. It should be first case only 22.5, next case only 45 lakh. Come down, ma. 22 lakh, next case 45 lakh. Correct agidiyala? Next. Yeah. Down, down. Sandhya. Yeah, down. So now let's quickly go to salary. No, wait. Statue, little go up. So, Bari, salary, side by side. Please observe the date of joining employment. Sometimes they may not give. If they give you is joined on 1st June, you have to consider 10 months salary. Please observe date of joining employment. Say 1st June 2019. All calculations for 10 months. 1st June ಹೇಳಿದ್ದು 30th June ಅಲ್ಲ. Understanding? Yeah. Now, Sharanya will read the one by one item. You have to tell me taxable or not. Come down, ma. Yeah. So, production manager. So, no data purchase. So, basic salary. 50,000 up to 30th, 31st October. That is for 7 months. Then 60,000. So, what should salary is due and paid on the last day of every month. Very important. So, Albari, give this note in the exam unless given otherwise. I don't know whether you've taken the printout or not. We have given this material long back. You've taken the print, nothing like it. If you're not taken, probably I think you're preparing for May 2021. I don't know. Or November 21. I don't know. Yeah. 1 month back only I've given almost the print, all the printouts. So 50,000 into 7 months plus 60,000 into 5 months. Understood? And this salary is due on last day of every question you have to give this note if they don't mention otherwise. This note is compulsory. Did you hear?
Yes, sir.
Next. Okay.
DNS allowance at 40% of basic pay.
Whatever salary, DA to RMRs. Entire DA fully taxable. Salary statement fully taxable. That's confusion illa. Say 40%. Say 40% of basic pay. Right side. Only for HRA computation, etc. Consider such DA which is taken for retirement benefit. Where there is no information, presume either way and give a note, either taken for retirement benefit or not taken. Yeah, is it audible?
Yes, sir.
Okay. So now read my heroine.
Bonus equal to 1 month salary paid in October 2019 on basic salary plus DA applicable for that month.
Okay. So they said what? Bonus equal to 1 month salary paid in October on the basic salary plus DA applicable for that month. Whatever is applicable for that month, you will do it. So October. So that means October, how much was the salary? 50,000. 50,000 ka 40%. That means bonus should be 70,000. Agreed?
Yes, sir.
Why 70,000? 50,000 basic pay plus 40% of the
40%.
50,000. Next.
Contribution of employer to recognized provident fund account of the employee at 16% of basic pay.
PF is one discussion I didn't do in salary intentionally. Anything contributed to SPF fully exempt. Anything to PPF fully exempt. RPF every year about 12% is taxable. Interest in excess of 9.5 or 8.5%, whatever is prescribed is taxable. Balance amount is exempted. URPF, nothing is taxable every year. Only when you receive the money or when you transfer to RPF, employer contribution and interest on employer contribution taxable as salary. Interest on employee contribution taxable as income from other source. Employee's own contribution will not be taxable. So here they said it is 16%. That 16% of the basic salary they have given. That means 4% of the basic pay is taxable. Next.
Professional tax paid rupees 2,500, of which 2,000 was paid by the employer.
So add 2,000, 1724. Employee's obligation met by the employer. Deduct 2,500, 16.3. Next.
Facility of laptop and computer was provided to Balaji for both official and personal use. Cost of the laptop.
Not worry. Free use of laptop and computer. No perquisite. Because I told you in the regular class, if the employer is giving you a laptop, he is making you to work day and night. So no perquisite. Next. Telephone expense. Second. Telephone expense, including mobile bill, reimbursed. No perquisite. Within the bracket rating. Mobile instrument, 10% of OC is taxable. Mobile bill is exempted. Mobile instrument exempt alla. Apple kotre, yav Apple tinodala. Apple 50,000 rupees. Other 10% every year tax ade. Monthly bill bartala, that is exempted. Artha agta idea? Next.
Yes, sir.
Yeah. Medical facility in government bar own hospital, exempt. Private hospital, fully taxable. Artha aita?
Yes, sir.
Odama.
Motor car owned by the employer, cubic capacity of engine exceeds 1.6 liters, provided to the employee from 1/11/2019, meant for both official and personal use.
Be careful with the data. Be careful with the data. So owned by the employer, expenses of so and so are met by the employer. So there is no driver. So that means, and it is a big car. It should be how much? 2,400. That's what I said. 600, 900. 600 to 1.5 is 900. 900 to 2 is 1,800. 1,800 plus first one, 600, 2,400. Expense are owned by the employer. Car owned by the employer. Big car. 2,400 into 5 months. Be careful with the date because it's given 1 level. Are you able to see that?
Yes, sir.
Next.
Leave travel concession given to employee, his wife and 3 children, 1 daughter aged 7 and twin sons aged 3. Cost of air tickets economy class reimbursed by the employer rupees 30,000 for adults and 45,000 for 3 kids.
Sandhya, put it down. Sandhya, put it down. Yeah. So full yeah, full almost right. So important LTC is point by LTC and medical perquisite. LTC and medical perquisite for self and family. Correct alva?
Yes, sir.
Self and family. Family means LTC is 10.5. Medical perquisite is given in 17.2 proviso. Family means family definition keeps on changing. Gottidya devrige? Yavani gottu. Yeah. 2 RMRs. Spouse and children. Spouse and children. Ali children kelage. How many children? Really?
2 children.
Yeah. 2 surviving children. The wordings used. Okay. Any 2 surviving children. Next, alle. When first issue is twins. Okay. First issue. Second issue is twins or triplets, etc. Consider all of them. That's what the meaning of this question. First daughter 7 years, then twins afterwards. So all of them will be given exemption. I repeat, normally 2 children. But if the second issue is twins, triplets, etc., you can take all of them. Arthak idea?
Yes, sir.
Okay. So what I said, spouse and children. Children, how many children? Normally 2 children. But if the second issue is twins, you can consider twins, triplets, etc. As note code make the example. Right side, SPB. With due respect, Papa, the great gentleman is no more. SP Balasubramanian. SPB andre sisters, parents, and brothers. Sisters, parents, and brothers who are wholly or mainly dependent on SSC. ಅದು ವೆರಿ ಇಂಪಾರ್ಟೆಂಟ್. ಅದು 10-5 ಕೇಳ್ಕೊತಾ ಇದ್ದೀರಾ ದೇವರು?
Yes, sir.
LTCಗೆ ನಾರ್ಮಲಿ 2 children. First issue and second issue twins ಆಗಿದೆ. You can take it. That's the objective of this question. ನೋಡ್ಕೊಳ್ಳಿ, ಬೇಸಿಕ್ ಪೇ, DA, then bonus 70,000 I said, RPF 4% of the basic pay, PT 2,000, then purchase of motor car. ಅಷ್ಟೇ. Minus ಇದು ಮರಿಬೇಡಿ. Next ಬರೀ, don't forget deductions under section 16. Say 16 1 year 50,000. So fine. Yeah. So Sandhya and others take actually the interest rate. They are not mentioned in the RTP also, I think. You can presume 8.5% and presume and give a note saying that interest for RPF is presumed to be up to 8.5% exempted, above 8.5% taxable. Artha aita?
Yes, sir.
Come down. Down. So all those with the explanation they are given, please go through. So about 10-5 also they are given. Trial concession note ಮಾಡ್ಕೊಳ್ಳಿ. Next, come down. So okay, question 13. Come down. Yeah, here this is an important point. So he has been appointed in a scale of 20,000, 1,000, 30,000. This is important. ಬರ್ಕೊಳ್ಳಿ. Working note. So 1/1/2019 to 1/1/2020. Regular class I have done this. All those things what we have done, ಅದೇ ಬಂದಿದೆ. Exam ಅಲ್ಲೂ regular class ಎಲ್ಲ ಅದೇ ಇದೆ. 20,000 per month. Next, 1/1/2020 to 1/1/2021. Every year increment ಆಗತ್ತೆ. ಕೇಳ್ಕೊತಾ ಇದ್ದೀರಾ? 21,000. So started with 20,000. Next year 21,000 per month. So I said 1/1/2019 to 1/1/2020, 20,000 per month. 1/1/2020 to 1/1/2021 is what? 21,000 per month. ನಮ್ಗೆ ಸಾಕು. Next, relevant previous year, April 19 to March 20. That is 20,000 into 9 months plus 21,000 into 3 months. 20,000 into 9 months plus 21,000 into 3 months. ಎಷ್ಟು ಬರುತ್ತೆ? 2,43,000. You are still waiting for me to do the calculation, is it? 20,000 into 9 months plus 21,000 into 3 months is equal to 2,43,000. ಓದಮ್ಮ, ಕ್ವಶನ್ ಓದಮ್ಮ ಕ್ವಿಕ್ ಆಗಿ. Kirti, read.
Mr. X
Is
is a
a 10 first BA.
Kirti, there's a problem. Sharanya, read.
Mr. X is a regular employee of Rama & Co. He was appointed on 1/1/2019 in the scale of 2,000, 1,000, 30,000.
Be careful. 1/1/19 is not 3 months. It is 12 months. 1/1/2019 is the last year. Next.
He is paid 10% DA and bonus equivalent to 1 month pay based on salary of March every year.
So I'll immediately March. How much is this basic pay? 21,000.
21,000.
Very 21,000. I'll 21,000. Next.
He contributes 15% of his pay and DA towards his recognized provident fund, and the company contributes the same amount.
So that means DA is taken for retirement benefit. Next.
He is provided free housing facility which has been taken on rent by the company at rupees 10,000 per month. He is also provided with the following
RFA calculation important. Yeah. Udama.
facility of laptop costing 50,000.
Exempted.
Company reimbursed the medical treatment bill of his brother of 25,000 who is dependent on him.
Fully taxable now. Medical treatment fully taxable now. Next.
The monthly salary of rupees 1,000 of a housekeeper is reimbursed by the company.
So CTC minus Z, sweeper, watchman, etc. fully taxable. 1,000 into 12. Next.
A gift voucher of rupees 10,000 on the occasion of his marriage anniversary.
Yeah, so fully taxable. Marriage it is exempted under 56 to 10. It is fully taxable. Next.
Conveyance allowance of rupees 1,000 per month is given by the company towards actual reimbursement.
So conveyance, city hardu, 6 items which are official. Conveyance allowance, whatever amount spent is fully exempted. Next.
He is provided personal accident policy for which premium of rupees 5,000 is paid by the company.
Health insurance premium is exempted under the proviso to 72. Exempted.
He is getting telephone allowance at 500 per month.
Actually, telephone allowance should be taxable. Only reimbursement of telephone bill is exempted. Come down. So, basic pay.
Oh, disturbance.
Yeah. So, Kirti, okay, ready. Basic pay 2,43,000. Everybody understood? Understood?
Yes, sir.
Yeah. DA 10% of the basic pay. Bonus, I said that March month. Bonus is March month. Employer contribution to RPF. So, in excess of whatever. So, write down working note. Summary, write down working note. Basic pay 2,43,000 plus DA taken. They have only said it is included. DA taken 24,300 is equal to 2,67,300. RPF 3%, 15 minus 12. That is the reason why Sandhya and the group they not talked even in this question also interest they are not discussing only because they are also not sure what the interest rate 8.5 or 9.5% they don't know. The interest ಬಗ್ಗೆ discussion ಇಲ್ಲ ಇಲ್ಲಿ ನೋಡಿ. So 267,300 into 3%. 8,019 taxable. Next, very important. Telephone allowance comma medical allowance fully taxable. Allowance ಅಂತ ಮಾಡಿದ್ರೆ fully taxable. ನೀವು exempt ಅಂತ ಬರ್ಕೋಬೇಡಿ, ಕೇರ್ಫುಲ್ ಆಗಿರಿ. Full stop and continue. Green ink. Actual reimbursement of telephone bill. Reimbursement ಮಾಡಬೇಕು. Telephone bill exempt. Telephone bill ಅಥವಾ mobile bill. Next. Further. Medical reimbursement in private hospital fully taxable. Medical reimbursement in private hospital fully taxable. However, as per proviso to section 17(2), medical reimbursement in own hospital, government hospital, public recognized hospital, medical insurance premium exempted. ನೆನಪಿಟ್ಕೊಳ್ಳಿ ಎಲ್ಲ ಕಡೆ ಬರುತ್ತೆ. ನೆಕ್ಸ್ಟ್ RPF. Next point, RPF greater than 12% taxable. Next, interest say 33,000 at 11%. Exempt 8.5% with note. ಅದೆಲ್ಲೂ ಇಲ್ಲ, ಕ್ಲಾರಿಟಿ ಇಲ್ಲ ಅದರ ಬಗ್ಗೆ. Therefore, taxable amount, be careful. 33,000 into 2.5 ಅಲ್ಲ, 33,000 divided by 11% into 2.5. 33,000 is equal to 11, 2.5 is equal to how much? ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? How much you got? Yeah. Some book 8.5 is, some book 9.5 is. Next, continue. So whatever, you can take 8.5 or 9.5, but give a note on that. What is right? ನಿಮ್ಮ ಟೆಕ್ಸ್ಟ್ ಬುಕ್ ಅಲ್ಲಿ ಇದೆಯಾ? ಟೆಕ್ಸ್ಟ್ ಬುಕ್ ಅಲ್ಲಿ ಏನಿದೆ? ಸ್ಟಡಿ ಮೆಟಲ್ ICI
9.5.
9.5 ಇದೆಯಾ? Okay, then you go by 9.5. ಅಲ್ಲಿ ಬರಿ 9.5, because actually 9.5 interest government is not giving. It should be 8.5. It's okay, we'll go by your textbook. ಅಲ್ಲಿ ಬರಿ. So above 9.5 ಮಾಡಿ ಅಲ್ಲಿ 9.5. Then 33,000 divided by 11 into 1.5. 4,500. Government is not giving 9.5. It is 8.5. But let's go by the textbook. ಅರ್ಥ ಆಯ್ತಾ ದೇವರಿಗೆ? Yeah. Next. Gift voucher. Gift voucher. Fully taxable. Fully taxable. Gift voucher is like a cash. It's like cash. Like here, say cash, even rupee 1. Kind ಗೆ ಮಾತ್ರ 4,999 exempted. ಅಲ್ಲಿ ಟೆಕ್ಸ್ಟ್ ಬುಕ್ ಅಲ್ಲಿ ಮಿಸ್ಟೇಕ್ ಇದೆ. Only for kind 4,999 exemption. Next, again I am repeating, don't forget standard action 50,000. ಮರ್ತೋಗುತ್ತೆ ನಾರ್ಮಲ್ ಆಗಿ, ಮರ್ತು ಬಿಡಬೇಡಿ. Understood? Come down. Okay, well, RFA calculation we didn't do. Right on. For RFA, salary definition is the biggest one if you remember. Salary means, very one by one. Basic pay 2,43,000. DA taken for retirement benefit 24,300. Bonus 21,000. Taxable allowance, say telephone 6,000. Everything you should add. Make important mark. Yeah, 6,000. Total up 294,300. Perquisite is equal to X plus Y minus Z. Two RMRs. X plus Y minus Z. X is equal to 15% of salary or actual hire charges, whichever is less. Salary is to 294,300 into 15%, 44,145. Or actual rent, the employer is paying rent of 1,20,000. Question ali ide. Whichever less is 44,145. Next line, Y is equal to perquisite of furniture by furnishing. Perquisite of furniture by furnishing. 10% of the OC. 10% of the OC or actual hire charges. Here it is nil. Laptop, computer not taxable ಅಂತ ಹೇಳಿದ್ದೀನಿ ನಾನು. Correct? Z means amount recovered. Yeah, come down. ಇಲ್ಲಿ question ಅಲ್ಲಿ alternative answer, I don't agree with that. That answer itself I don't agree. Point number 5. Gift voucher is if they given in kind andre matra exemption 4,999. If it is above that, fully taxable. Come down. There's a mistake. Yeah. Entire answer is wrong. There. Point number 5. Yeah. Down. Next, ESOP given. Okay, question number 14. Very ESOP. Per quantity is equal to FMB minus Z. Z under throughout our discussion, Z means amount recovered. Now, if you look at the question, quickly glance it. 1,000 shares are given, allotted at 200, and fair market value 300. Aste per quantity is equal to 1,000 shares into starter bracket 300 minus 200 is equal to 1 lakh. ಅಷ್ಟೇ ಅರ್ಥ ಆಗ್ತಾ ಇದೆ ದೇವರಿಗೆ? ಯಾ, ವೆರಿ ಇಂಪಾರ್ಟೆಂಟ್. 1,000 into fair market value 3 lakh. 1,000 into fair market value 300 is equal to 3 lakh. Shall be cost of acquisition under 49(2)AA. ಅಲ್ಲಿ ಪ್ರಿಂಟ್ ಆಗಿದೆ ನೋಡಿ ಕೆಳಗೆ 49(2)AA for subsequent sale. Entire fair market value ಅಂತ ಬರ್ಕೊಂಡಿದ್ದಾರೆ, ನೆನಪಿದೆಯಾ? So, if subsequently sold at 420, your favorite number, ಬರ್ಕೊಳ್ಳಿ. If subsequently sold at 420, 420,000. Then capital gain is equal to 420,000 minus 3 lakh. Entire fair market value. That one you do it. The next one is what? Running and maintenance expense met by the employer, but below 1.6. That means 1,800 into 12. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? Yeah. And value of free lunch provide 2,200 they said. So 50 rupees per meal if you do. So it comes definitely higher. That's why it's exempted. Come down. And for how many working days you can take? 50 rupees per meal they said. So nothing is given you, right? 300 working days. Normally it is around 250, 260 days. 365 days ಅಲ್ಲಿ 52 Sunday ಹೋಗುತ್ತೆ, ಕರೆಕ್ಟಾ? So 300 working days ಅಂತ ತಗೊಳ್ಳಿ, 50 rupees per meal. Next, come down ma. Yeah. So read the question ma. Who will read?
Mr. Datta received voluntary retirement compensation of 7 lakh.
ಏನ್ ಮ್ಯೂಸಿಕ್ ಕೇಳ್ತದೆ? ಮದುವೆ ಆಗ್ತಾ ಇದ್ದೀನಿ ನಿಮ್ದು?
ಇಲ್ಲ ಸರ್.
ಯಾ, ಕಟ್ಟಿ ಏನೋ ಕೇಳ್ತಾ ಇದ್ದಾಗ ಅಂತ. ಯಾ, ನೆಕ್ಸ್ಟ್ ರೋಡಲ್ಲ.
Mr. Datta received voluntary retirement compensation of rupees 7 lakh after 30 years, 4 months of service. He still has 6 years of service left. At the time of voluntary retirement, he was drawing basic salary rupees 20,000 per month. DNS allowance, which forms part of pay, rupees 5,000 per month. Compute his taxable voluntary retirement.
Right. Yeah, right. VRS exempt under section 1010cc. LOF rule 2BA ಬೇಕಾದ್ರೆ rule 2BA 1010C 1010cc ಅಲ್ಲ 1010C ಬೋರ್ಡ್ ನೋಡ್ಕೊಳ್ಳಿ. LOF small a actual received 7 lakh, small b statute limit 5 lakh, maximum is 5 lakh. Small c ಅಲ್ಲಿ C1 ಅಂತ ಬರೀ inner column. Actually you can write everything outer column also, but the language of the law is C1. Last salary drawn, how much is drawing?
20,000 per
plus 5,000. 25,000 into 3 times. Oh, sorry. Last salary drawn 25,000 into completed year of service 30 years into 3 times. Inner column, it comes to 20 lakh. Inner column, don't take it outer column. 12,50,000, or C2, last salary 25,000 into balance service, which is the bracket 6 years into months. C2 inner column 18 lakh, or 12,50,000 mat 18 lakh, whichever is less. Or C1 or C2, whichever less. As actual law, there is no clarity. Some people take whichever is higher, whichever less. Outer column we take it 18 lakh. So outer column 7 lakh, 5 lakh, 18 lakh. This is the correct presentation. Arthak idea.
Yes, sir.
So amongst these, which is the least figure? 5
5
lakh.
lakh.
Therefore, taxable amount is equal to received minus exempted. Always write this: received minus exempted. Illa andre nimage committed pension confusion agutte. Received minus exempted. 7 lakh minus 5 lakh, 2 lakh. Very important reading note. When 1010C exemption is given, no relief under section 89. No relief under section 89. ಅಥವಾ 89 ಸಿಕ್ಕಿದ್ರೆ 1010C ಕೊಡಬಾರ್ದು. ಅರ್ಥ ಆಯ್ತಾ ಇದು? Come
Yes,
down.
sir.
Come down. So go back to the theory, heroine. So this is about Jalak. Ali one is salary one note bari all of you. Statutory limits. Statutory limit. Number 1. Keep writing. 1010 gratuity 20 lakh. For non-government. Government limit illa. Correct?
Yes, sir.
Next. 1010 AA earned leave. 3 lakh. And 10 month salary. ಅದು ಎರಡು ಲಿಮಿಟ್ ಅದು. ಕೇಳ್ಕೊತಾ ಇದ್ದೀರಾ?
Yes, sir.
Next, 1010B retrenchment compensation and 1010C VRS, both 5 lakh. 1010B or VRS, both are going out ಅಷ್ಟೇ. ಅದಕ್ಕೆ 5 lakh. 1010B retrenchment compensation and 1010C VRS 5 lakh. Next, 1010A, 10 within the bracket 10A, commuted pension. ಇಲ್ಲಿ ಅಮೌಂಟ್ ಇಲ್ಲ. 1/3 ಬಾರ್ half of full value. Full value of commuted pension. Full value ನೆನಪಿಟ್ಕೋಬೇಕು. Next, HRA 40% ಬಾರ್ 50% of the salary. ಅದು ಸ್ಟ್ಯಾಚ್ಯೂರಿ ಲಿಮಿಟ್. Next, EA entertainment allowance only for government employee 5,000. Next, further, next line, further. Small a, separate is all, small a. Gift in kind up to 4,999 exempt. 5,000 alla, ನಮ್ಮ bookಲ್ಲಿ wrong ಇದೆ. ನಮ್ಮ book ಅಂದ್ರೆ study material, sorry. Gift in kind up to 4,999 exempt. Comma. When paid 6,000, fully taxable 6,000. Free meal, Sodexo coupon, which are non-transferable, etc. Up to ₹50 per meal exempt. Excess taxable. Next, education facility in own source. You have already written that. Education facility in own source up to 1,000 per month per child. Exempt. If exceeds, entire amount fully taxable. Correct?
Yes, sir.
One more note you write. When loan given, perquisite is equal to month closing balance. Actually, they use the word monthly average balance, which is the closing balance. Closing monthly balance into SBI rate on 1st April 99. On 1st April 2019. Minus Z. Next. Salary for various purposes. Important. They'll update battery. Salary for various purposes. Small a. For EA. EA andre only basic pay. Next. Number 2. For gratuity covered under POGA. Basic pay plus entire DA. Taken non taken बाद में गया. Basic pay plus entire DA. Taken or not. In the bracket, taken for retirement benefit or not. Next, number 3. For most furniture, for RFA, basic pay plus DA taken ... taken for retirement benefit LTV plus any commission plus any fees, bonus plus allowances to the extent taxable. Next point. For most of the other cases, nothing is given, go by this. Most of the other cases, say HRA, gratuity covered under POGA, RPF, salary is equal to basic pay plus DA if it is taken for retirement benefit plus commission as a fixed percentage of turnover. It should be employee. Gessner duplicate of private limited on Supreme Court Edition 117 ITR 1 ಅಥವಾ 1 Taxman 1 Supreme Court Edition. ಅದು ಬಿಟ್ಬಿಡಿ ನಿಮ್ಗೆ ಬೇಕಾಗಿಲ್ಲ. ಆಯ್ತಾ?
Yes, sir.
Fine. I think with this we have covered the salary. Let's get back to house property. Gogama. Whatever missed also there we covered. Yeah. So now the next point is house property chapter. So with the only head of income which taxes incomes on the notional basis. Even without having income, you may have to pay the taxes. 5 houses self-occupied, 2 are taken as nil, other 3 are deemed to be let out. So section 22 to 27 deals with the income from house property. 22 is the charging section. Annual value of a building or land appurtenant thereto is chargeable tax in the hands of owner. So annual value section 23, owner section 27. Provided is not used for own business or profession. That means any building is income from house property. Land is not income from property, but land which is adjacent, attached to the building will be considered the income from house property. So you should be the owner of the same. That means I have the building, I give it to Sharanya, for me income from house property. Sharanya subleases, she is not the owner, it is income from other source most of the time. Fine. So section 23, come down, ma. Composite rent, etc. may not be taxed under house property. Yeah. Section 23 is the most important section, which talks about the annual value. Look at me. Basically, 2 categories of houses. 23, 2 property, 2 houses, either self-occupied or Mathi's house is in Madanpalli. She could not occupy the same because of the business, employment or profession elsewhere. BEP, business, employment or profession elsewhere. Then the law says any 2 houses, 2 self-occupied in Bangalore, or 2 houses in village which could not be occupied, or 1 in Bangalore, 1 in village. 2 houses, annual value is nil. If you are using more than 2 houses for self-occupation, etc., all other house properties are deemed to be let out. So for 23-2 property, the only reduction is interest. So interest up to 30,000 rupees normally. Only for acquisition and construction, you get deduction up to rupees is to 2 lakh rupees when you satisfy the conditions. Whereas if it is a let out property or deemed let out property, so how much ever what you call properties you have, You have to compute the annual value as under. All of you write down. Income from house property. Dash, you write 2 categories of houses. 2 RMRs, 23.2. 23 which is the bracket 2. Then if it easy. 23 is annual value, 2 properties exemption is 23.2. 2 property, 23 which is the bracket 2. You write a house property self-occupied, or could not be occupied due to BEP elsewhere. Could not be occupied due to BEP. BEP and business, employment or profession elsewhere. Below that, for 2 such houses, both self-occupied, both outside, anything is okay. Arthakta idea. For 2 such houses, annual value nil. Annual value nil. Below that, no benefit should be derived. Even 15 days in a year, you would have let out, gone case. It should not have been let out, no benefit should be derived. Below that, you write only reduction, 24 which is the bracket small b, interest for ACR cube, acquisition, construction, repairs, renewal and reconstruction. Interest for ACR cube, acquisition, construction, repair, renewal and reconstruction, up to 30,000. Up to 30,000. However, only for AC and the acquisition and construction, which is completed within 5 years of taking the loan. Within 5 years from the year of taking the loan. So what date you take the loan? Baad mein gaya. 2nd April, 10th April, or 30th September. Whatever date, that year chodo plus 5 years. Complete within 5 years of taking the loan. 5 years of taking the year of loan. Deduction up to 2 lakh. Deduction up to 2 lakh. Only for AC. Idu bitre bere yaude last house property agoytu. Artha aita? Right side. 23, right side, right? LOP by DLOP. LOP by DLOP. Compute GAV, which is what? MRV or FRV, whichever is higher. That figure of standard rate, whichever is less. MRV or FRV, whichever is higher. That is A. That figure of standard rate B, whichever is less. C. Standard rate is the whichever is less, but whichever is higher. Then ARR, actual rent received or receivable minus unrealized rent, D, or C, whichever is higher. E is equal to D less vacancy allowance. idea? So you write deductions 2 RMRs. Proviso to 23.1. Any municipal tax paid anywhere in the world. Any municipal tax paid, make a circle for paid, anywhere in the world. If I have a house property in South Africa, Johannesburg, municipal tax, if I paid, it is allowed. Venugopal Reddy versus CIT, Madras High Court decision. The case law beda, but then CFL, yeah, CFL also I only teach TT, no. So anywhere in the world, paid, make a circle for paid. Payment basis, cash basis, that is. Right side, 24, small a, standard action 30% of NAV, small b, any amount of interest. Restriction illa. That is whatever we discussed, point number 1. Point number 2. Pre-construction period interest. Make a chart. From the date of loan, with the middle of the page, from the date of loan till 2 RMRs, left side, immediately preceding year of completion. Immediately preceding 31st March, immediately preceding 31st March of year of completion. 31st March of year of completion. Or right side, date of complete repayment of loan. Date of complete repayment of loan, whichever is earlier. Whichever is earlier. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Whichever is earlier. Assured 1/5 is allowed from the year of completion for 5 years. 1/5 is allowed from the year of completion for 5 years. Full stop and continue. 30,000 but 2 lakh supra includes the same. Next line. Further, such 30,000 but 2 lakh is per house or both the houses. 30,000 but 2 lakh is for both the houses in aggregate. For both the houses in aggregate. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ? Aggregate. So one house 2 lakh, another house 2 lakh ಇಲ್ಲ. Next point. Partly self-occupied and partly vacant. Annual value nil. ಆಪ್ತ ಮಿತ್ರ ರಾರ ನಾಗಾವಲ್ಲಿ ಕೇಸ್. ಗ್ರೌಂಡ್ ಫ್ಲೋರ್ ನೀವು ಆಕ್ಯುಪೈ ಮಾಡ್ತೀರಾ, ಫಸ್ಟ್ ಫ್ಲೋರ್ ಅಲ್ಲಿ ನಾಗಾವಲ್ಲಿ ಇರ್ತಾರೆ. annual value nil. ఏమండి కీర్తి గారు కరెక్ట్ నో? రారా సరసకు రారా ಅಂತ. Right. Next. Partly self-occupied and partly let out. Partly self-occupied and partly let out, 2 RMRs. 75% self-occupied, 25% let out. Annual value only for 25%. Taxable annual value only for 25%. Correct? Right side. 3 months self-occupied, 3 months let out, 9 months self-occupied. 3 months let out and 9 months self-occupied. What is the law saying? Even if you let out for 1 day, it's out. Below the right? Compute annual value for 12 months. Important. Are you able to understand? Annual value for 12 months. Below the left side, be careful with interest. You 25% ಮಾತ್ರ ಮಾಡಕ್ಕೆ ಹೋಗ್ಬೇಡಿ, ಇಂಟ್ರೆಸ್ಟ್ ಕ್ಯಾಲ್ಕುಲೇಷನ್ ಮಾಡಬೇಕು. ಬಿ ಕೇರ್ಫುಲ್ ವಿತ್ ಇಂಟ್ರೆಸ್ಟ್ ಅಪೋರ್ಷನ್ಮೆಂಟ್ ಅಂಡ್ ಲಾಸ್ ಫಾರ್ 23(2) ಪ್ರಾಪರ್ಟಿ ಡ್ಯೂ ಟು ಇಂಟ್ರೆಸ್ಟ್. 23(2) ಪ್ರಾಪರ್ಟಿಗೆ ಇಂಟ್ರೆಸ್ಟ್ ಡಿಡಕ್ಟ್ ಮಾಡಿದ್ರೆ ಲಾಸ್ ಬರುತ್ತೆ. ಆನ್ಯುವಲ್ ವ್ಯಾಲ್ಯೂ ಇಸ್ ನಿಲ್. ಲಾಸ್ ಫಾರ್ 23(2) ಪ್ರಾಪರ್ಟಿ ಬಿಕಾಸ್ ಆನ್ಯುವಲ್ ವ್ಯಾಲ್ಯೂ ಇಸ್ ನಿಲ್. ಆನ್ಯುವಲ್ ವ್ಯಾಲ್ಯೂ ಮೈನಸ್ ಇಂಟ್ರೆಸ್ಟ್. ಅರ್ಥ ಆಯ್ತಾ ದೇವರಿಗೆ? ನೆಕ್ಸ್ಟ್, ವೆರಿ ಇಂಪಾರ್ಟೆಂಟ್, ವೆರಿ ಇಂಪಾರ್ಟೆಂಟ್. ವೆನ್ ದೇರ್ ಆರ್ ಮೋರ್ ದೆನ್ 23(2) ಪ್ರಾಪರ್ಟೀಸ್ ಅಥವಾ ಸೆಲ್ಫ್ ಆಕ್ಯುಪೈಡ್ ಅಂತ ಜನರಲ್ ಯೂಸೇಜ್, ತಪ್ಪದು. ಮೋರ್ ದೆನ್ 23(2) ಪ್ರಾಪರ್ಟೀಸ್ step 1, compute income of each property. I'm expecting this question in the exam. Compute income of each property as if let out. As if let out. Small b. Then do permutation and combination. ಯಾವುದು ಮ್ಯಾಥ್ ಸ್ಟ್ಯಾಟ್ಸ್ ಹೋಗ್ಬೇಕಾ? permutation and combination of considering 2 such properties as self-occupied. Refer problem. ನಮ್ಮ ಪ್ರಾಬ್ಲಮ್ ಇದೆ, ಅದು ತೋರಿಸ್ತೀನಿ ಮತ್ತೆ. ಅದು ಇಂಪಾರ್ಟೆಂಟ್ ಕಾನ್ಸೆಪ್ಟ್. ಓಕೆ, ಸೊ 23 I covered. One special point, all of you here. 23 is the last one. When the house property is held as stock in trade, no initial income for 2 years. 2 years from the year of completion again. So April, September, March concentrate ಮಾಡಿ ಕಂಪ್ಲೀಟ್ ಬಾಡ್ಮೆಗೆಯ 31st ಮಾರ್ಚ್ ಆದ್ಮೇಲೆ ನೆಕ್ಸ್ಟ್ 2 years. ಏಪ್ರಿಲ್ ಅಲ್ಲಿ ಕಂಪ್ಲೀಟ್ ಆಗಲಿ, ಸೆಪ್ಟೆಂಬರ್ ಕಂಪ್ಲೀಟ್ ಆಗಲಿ, ಮಾರ್ಚ್ ಅಲ್ಲಿ ಕಂಪ್ಲೀಟ್ ಆಗಲಿ ಮನೀಷಾ, that year chodo plus 2 years it will not be considered as a house property. There is no income because they are stock in trade, they're meant for sale. But within 2 years also, if you don't sell, then derived income comes into picture. 24 I've already discussed deduction. Standard deduction 30% only for LOP, whereas 23 property illa and interest I have discussed only 2 deductions. One more point, Barry. Apart from above deduction, no other deduction under house property. Apart from above deduction, no other deduction under house property. Next, section 25. What is 24? Deduction. What is 25? No deduction. What is 24? Deduction. What is 25? No deduction. Interest, etc. if you pay outside India without TDS, fully disallowed. 25A, if there are arrears of rent, baki, or unreal rent if you receive now, whatever you receive minus 30% fully taxable this year as house property. There is an exception to the rule that even though you don't have a house, it will be taxable. But Mr. X, 25A, 25A, Mr. X sold house property in 2010. Received arrears of rent of such property in February 2020. On the building illa. Arrears of such a rent in February 2020. 4 lakh. Income under 25B. 4 lakh minus 30%. 2,80,000. Arthaita. It is under section 25A. 25B alla 25A. Earlier it was 25A and 25B, 25A, everything is merged. 25A, 2,80,000. Next, 26 is co-owners. Is myself and Kirti owning a house. If the share is definite, 60-40, 60% my hand, 40%. If there is no share definite, then entire house property is taxed as AOP of Shetty and Kirti separately. There is no proportion. 27 defines who is the owner. Like when you transfer your property to spouse, transfer of property to spouse without adequate consideration, or minor child, disputed ownership, there is a discussion. Now come down to capital gains, man. Because business income is big head, we'll discuss tomorrow. We'll go to the capital gain, a small head, and then we do the problem and wind up. Down. Yeah. So capital gain, so I have a building, I give it on rent, it is income from house property. If I sell the building, it is capital gain. So two important words under the head capital gain, 247 and 214. Adala green madama. Transfer of a capital asset. Barkodi notes book ali capital gains. Capital gain. Transfer 247 of plus capital asset 214. 214 is equal to capital gain 45. Example 1. Sale of land is equal to transfer plus capital asset is equal to capital gain. Example 2. Gifting of land. Gift is not a transfer is equal to reading no transfer plus capital asset. Land is a capital asset. Gifting is not a transfer. Section 47 within the bracket I. No transfer plus capital asset is equal to no capital gain. Next, third example. Sale of house furniture. Dash your transfer plus no capital asset. House furniture is not a capital asset. Or non-urban agriculture land is equal to no capital gain. I hope you understood. So when there is no transfer, when there is no capital asset, there cannot be capital gain. So what is capital asset? Capital asset means property of any kind held by the SSC. Yeah, property of any kind held by the SSC. So movable, renewable, whatever. But it does not include stock in trade because it's covered under business income. Movable personal effects except jewelry. Jewelry is always a capital asset. Non-urban agriculture land, gold deposit bond, printing mistake, 1999. 1999. Okay. Then gold monetization scheme of 2015. So capital asset include property of any kind. So I'll work on the capital asset definition. All of you write down. Capital asset 2 within bracket 14. All of you listening? Ali FI don't ಬರಬೇಕಾಯ್ತು. 2 within bracket 14. 2 RMRs. Property of any kind held by the SSE. Right side. Any security held by FII, foreign institutional investor. May not be relevant at intermediate, but definition you should know. Any security, or the businessman or whatever, foreign institutional investor. Capital asset is always inclusive of this. Left side, property of any kind. Right side, what? Any security. Now below the left side, does not include one by one stock in trade, etc. Number 2, personal effects being movable, say wearing apparel and furniture, but excludes JADPAS. ಇಲ್ಲಿ B JADPAS ಹೇಳೋದಿಲ್ಲ, only JADPAS, because jewelry etc. covered. B bullion is any capital asset. JADPAS. JADPAS is jewelry, archaeological collection, drawings, paintings, work of art, sculptures. It comes little later. Next, it excludes. Next, non-urban agriculture land. Next, certain specified bonds. Say GMS 2015. 1999 bond ಎಲ್ಲ ಇರ್ಲಿಕ್ಕಿಲ್ಲ ಈಗ. Gold monetization scheme bond. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Yeah. So this is a capital asset. Capital asset can be short term or long term. What is short term? Any asset held for less than or equal to 36 months is short term. Loser, LUUZ, listed security, units of UTI, units of mutual fund, and zero coupon bond. Listed security, units of UTI, units of mutual fund, then zero coupon bond, 12 months. LBB and unlisted shares, 24 months. But a capital asset can be, it can be of 2 types. Left side, short term, 242A, bekadre. Short term, under that 3 RMRs. Sorry, short term, under that held for 3 RMRs. First one, less than or equal to. I'm audible now? I said disturbance. I think there is some disturbance. Are you able to hear me now? Perfect. No, there is some network issue. Sorry. Short term. I said left side short term held for under 3 RMRs. Less than or equal to 12 months. Lose. LUUZ. Second RMR. Less than or equal to 24 months. Less than or equal to. Yaudu LBB. The lot of short form what we use. I repeatedly use that. LBB and unlisted securities. Unlisted shares. Sorry. Unlisted shares. Last RMR, less than or equal to 36 months, all other cases. Easy? For the benefit of my new listeners, lose andre listed securities, units of UTI, units of mutual fund, zero coupon bond. LBB andre land, building or both. So lose ge 12 months. LBB get 24 months. All other cases 36 months. Artha aita? Right side long term. Other than short term. Other than short term is called long term. Are you there? Fine. So what is transfer? Transfer is equal to SEER, sale, exchange, extinguishment, relinquishment, compulsory acquisition, etc. So I sell my asset to Sharanya. It's a transfer. If BMRCL compulsorily acquires, that's also transfer. So there is a very important definition, 247. Everybody should remember. 247 is transfer. What is section 47? No transfer. See, 247 is what? Transfer. Section 47 is what? No transfer. Fine. So 45 talks about the chargeability. So any capital gain arising on the transfer of a capital asset shall be taxable as a capital gain. 45 1A says insurance money received on the destruction of a capital asset is taxable on receipt basis. 45.2 is important. Conversion of a capital into stock in trade. Whenever you convert your capital into stock in trade, two incomes will arise. Okay, only in the year of actual sale. Very all of you, right? Conversion. Is it audible correctly? Any network issue? No. Okay. Conversion to RMRs. Left side, capital asset into stock in trade. Capital asset into stock in trade. Shettisar Textile. Converting land into stock. That is starting real estate. Below that, in the year of actual sale of land, stock in trade, two incomes arise. Say cost of land 10 lakh. I not given earlier, no? Cost of land 10 lakh, comma, FMV on the date of conversion 30 lakh, sold at 45 lakh. Income is equal to 45 minus 10, which is split into 2 RMRs. Let's say now audible? Perfect, no? Yeah.
Yes,
Audible?
sir.
Audible? Yeah, there are some network issues in this morning. Okay. So which is split into, unfortunately our act is not working. I'm working through only mobile. That's the reason why we have issue. Our Wi-Fi is not working for last 3 days. Complaint after complaint, but they're not doing anything. Unfortunate. It's okay. Anyway, we have decided to do it. We do it. We don't have an option. Yeah, shall we
Yes,
continue?
sir.
Yeah, what is that?
Split into.
Split into 2 RMRs. Left side, business income 45 minus 30. Right side, capital gain 30 minus 10, 20. Subject to long term, short term, you have to see. So you can use your common sense. Initially, it was a capital asset. So capital asset has grown from 10 to 30. That is a capital gain. After that is a stock in trade. Conversion of capital stock in trade 30 has grown to 45. I said
45, sir. 45.
45. That 15 lakh is a business income. Understood?
Yes, sir.
This is actually given in section 45.2. It is given in 45.2. Complete right side. Stock in trade into capital asset. Ulta case idu. Stock in trade into capital asset. 28 within the bracket 6A. 28 within the bracket VI small a. Close the bracket. Say Shettisar real estate. Land stock in trade converted into capital asset. Cost of land 10 lakh. Fair market value 30 lakh. Sold as capital asset for 45 lakh. Be careful, you are selling it as a capital asset. Ulta case ido. ಗೊತ್ತಾಗ್ತಾ ಇದೆಯಾ?
Yes, sir.
ಇಲ್ಲಿ ಡೇಂಜರಸ್ ಇಲ್ಲ ಇದೆ. ಹಿಯರ್ 2 RMRs. Left side. In the year of conversion, 28/6A, FMV minus cost 30 minus 10. What the fair market value 30 lakh alva?
Yes, sir.
Minus 10 lakh, 20 lakh is business income. Right side. Upon subsequent sale as capital asset. Ulta case ನೋಡ್ಕೊಳ್ಳಿ. Upon subsequent sale of capital asset, capital gain in the year of sale. ನೋಡ್ಕೊಳ್ಳಿ, ಲೆಫ್ಟ್ ಸೈಡ್ ಅಲ್ಲಿ ಇಯರ್ ಆಫ್ ಕನ್ವರ್ಷನ್, ರೈಟ್ ಸೈಡ್ ಆಕ್ಚುಯಲ್ ಸೇಲ್. ನೋಡ್ತಾ ಇದ್ದೀರಾ?
Yes, sir.
In the year of actual sale, 45 minus 30. 45 minus 30 is equal to 15 lakh. Capital gains.
Capital gain.
So be careful when you convert capital into stock in trade. What did I say on the left side?
In the year of actual sale.
Did you write that?
Yes, sir.
So left side in the year of actual sale, make a circle. If you not written, left side bari. In the year of actual sale, 2 incomes arise. Whereas right side only, in the year of conversion, 1 income. In the year of actual sale, 1 more income. They are not in the same year. समझ में आ गया क्या?
Yes, sir.
Okay, right. So 45/3, 45/4 time pass. When a partner converts his asset into a partnership firm, so whatever the amount recorded in the books of the firm shall be considered as sale value. Ulta case, firm to partner ಆದಾಗ fair market value on the date of transfer will be considered as a sale value. 45/5 is a compulsory acquisition. Any compensation received on a on a received basis, taxable in the year of received basis, entire compensation minus cost of acquisition. If there's an enhanced compensation, entire amount is the capital gain. If there's a reduction, you should do the recomputation. Fine. 46, come down. Distribution of asset by company liquidation. First, you should apply 222C dividend, deemed dividend ಬರುತ್ತೆ ನೋಡಬೇಕು. Balance amount will be capital gain. 46A, normal buyback, sale value minus cost of acquisition, capital gain. 247 is transfer, 47 is no transfer. So gifting of the asset, transfer by way of a will, etc. shall not be considered a transfer. Come down, may not be so important. Computation of capital gain, is normal, full down, is normal computation like sale of an asset. Assuming I have an asset like this, the asset, if I sold at 100, purchased at 80, 20 rupees is the capital gain. So inside the asset, if something is there, drink. So like land, you have an asset. When you dig the land, if you get something, you should give it to the government anyhow. So sale value minus expense incidental sale is called NSC. From the reduced cost of acquisition or index cost of acquisition, difference is called capital gain. So as per second proviso to 48, wait. You need to do the indexation. What is indexation? Bringing that cost to the today's value. Everyone must remember previous year 1-2. Previous year 1-2 starting 100. Your previous year 1920, 289. You must remember the indexation. These two. In between, they'll give you. Previous year 1-2, okay. Previous year 1-2 is 100. Previous year 90 is the previous year, the financial year, assessment year. Always I talk in previous year. Assessment year, you should add one. 1920. You should remember. Previous year 1-2, 1-day, 1-2 is 100. And 1920 is how much? 289. Next, come down. If an asset was acquired before 1/4/2001, you can take the actual cost or fair market value on that date, whichever is higher. All improvement before 1/4/2001 completely ignored. So these provisos, non-resident may not be relevant. Indexation, I said you should do for LTCA. If it is EOF unit, equity shares, etc., no indexation. There is separate taxation under 112A, and capital index bonds and sovereign gold bonds are always going to be indexed. Then sixth point is important. Whenever I gift my ESOP shares, on that day, what the fair market value will be considered as sale value. And under capital gain chapter, STT on purchase as well as sales cannot be allowed. Business income is allowed, where here it is not allowed. Now all of you write down. Computation of capital gains. Sale value, XXX, less expense incident to sale. Difference is called NSC. Less COA bar ICOA, cost of acquisition or index cost of acquisition. less COI, cost of improvement bar index cost of improvement, XXX, difference is capital gain, less exemption under section 54 to 54H. H is not exemption section. 54 to 54H. Difference is capital gain. Taxable capital gain. Next line. Index cost for long term. Index cost for long term is equal to actual cost into CII of year of transfer. You have to see if there is a conversion of capital asset, that year itself is the year of transfer. CII of year of transfer divided by CII of year of acquisition. Once it's a long term, it is always long term, even for improvement. 1 year before also, if it is done, you should do the indexation. Arthak idea?
Yes,
Fine.
sir.
Next. Next, okay. So cost of acquisition, cost of acquisition. Arrow marks, important one. First one, you write normally actual cost. Right side, special cases, section 49. Special cases, 49. Arrow marks, 49.1. When received by way of a gift, will, etc. 1 second. Received by way of a will or gift from relative. Gift from relative. Below that, cost to the previous owner. Tomorrow we'll discuss gift income. Cost to the previous 49.1, 49 subsection 1. Second arrow mark. 49 subsection 2AA. 49, which is the bracket 2AA. Entire FMV, fair market value, of ESOP securities referred in 1726. Third arrow mark. 49.4. Entire, not minus Z dollar. Entire FMV, sorry, entire stamp value bar FMV. Entire stamp value bar FMV. When offered as gift income under 56.210. When offered as gift income under 56.210. Which is the bracket, say from non-relative. Last arrow mark, 49.9. Entire FMV of 28 6A cases. (28 6A), 28 within the bracket VIA cases. One example, right? Shetty sir received gift from Sharanya. Land costing 10 lakh. Stamp value 40 lakh. Two arrow marks, left side. Sharanya is a relative. Shetty sir received of that,
Yes, sir.
yeah. So 2 arrow marks. Left side, sorry, next line, below the left side. For Shetty sir, 2 arrow mark. Gift income nil. 56.210 nil. Yakare, she is a relative. Am I right? Right side.
Yes, sir.
Therefore, cost to Shetty sir is equal to 10 lakh. Cost to the previous owner, 49.1. Right side. Sharanya is not relative. Below that, for Shetty sir, gift income is equal to stamp value 40 lakh minus Z nil. 40 lakh. Right side. Cost to Shetty sir under 49.4 for subsequent sale 40 lakh. ಅರ್ಥ ಆಯ್ತಾ? ಅರ್ಥ ಆಯ್ತಾ? Fine. Come down, ma. Okay. So 50 and 50A we'll discuss tomorrow in the business income. It comes in business income. So 50B, whenever there is a sale of an undertaking, slum sale, sale value minus net worth of the undertaking will be called capital gain. Net worth is assets minus external liability. Assets, if it is a depreciable asset, take WDV under 43.6. Whereas if it is all other assets, take it at a book value. Okay, the actual cost. Revaluation is unheard in income tax. So 50C, 56.210, I'll discuss tomorrow. Whenever there is a sale of an asset, an import section, tomorrow we'll be discussing. Come down, come down. So advance money forfeited. Whenever there is a forfeiture of advance money, come down, Sandhya. So I enter into an agreement with Monisha, but after receiving the amount, that advance money has been forfeited. So what to do? If it is before 2014, always reduce from the cost of acquisition. Now, if the negotiation lead to transfer, reduce from cost of acquisition. If it doesn't lead to transfer, then entire amount received will be considered as income from other source. Then we have the last leg of capital gain. It's called exemptions under the head capital gain, 54 to 54H. What is there in your syllabus? So let's discuss. So section 54, transfer of a residential house property, invest that capital gain in another residential house property within 1 year before or 2 years after, or construction within 3 years, entire capital gain is exempted. So if you are not able to make investment within the due date under section 139(1), you can deposit the money in the capital gain account scheme, withdraw the same and utilize for the said purpose. Normally you get only for one house. However, now they give exemption for 2 houses as long as your total capital gain exemption does not exceed 2 crore. It is a once in lifetime offer. Last para. Come down. Come down, ma. Next one is 54B. Urban agricultural land is a capital asset. Non-urban is not a capital asset. I will not discuss. If an urban agricultural land is sold, if you invest that agricultural land in another, that capital gain in another agricultural land, urban or rural, you will get an exemption. Time limit is 2 years. 54D, D for land, build, ind, and atara. A land building forming part of industrial undertaking is compulsorily acquired. Then whatever the capital gain comes, invest within the 3 years in another land or building forming part of industrial undertaking. Then 54F is a slightly unique. Transfer any LTCA other than residential house property, say jewelry, commercial property, etc. And the net sale consideration, this is the one section applicable to you. Where net sale consideration, you invest in another residential house property, you will be given exemption. On special point is, on that day, SSC should not own more than 1+1 residential house property. More than 1+1 residential house property. And if you invest NSC or more, the entire amount is exempted. Otherwise, proportionally exempted. Next, 54EC, any long-term capital asset being land, building, or both. It can be on commercial land, commercial building. If you invest, if you get the capital gain, invest in any of the 4 bonds, NAI, on the highway road, National Highway Authority of India, RECL, Indian Railway, and Power Finance, which are the bonds which are redeemable after 5 years. You get an exemption up to rupees 50 lakh. And 54E, I feel it is redundant because that investment in the units of notified fund, you should have been invested before 1st April 2019. Before your previous year starts only, it's exempted. But so remember, 54 is house property, residential house property, house property. 54B is agricultural land to B for 54 is house. B for what? Bhumi, agricultural land to agriculture. 54D is land, build, ind, undertaking. 54F is what actually house property. Other than residential property, invest in house property, but invest in NSC, important. And 54EC, easy. Okay, 50 lakh rupees exemption for LBB, investing in 4 bonds. Fine, come down. The taxation, very, very important. All of you write down taxation chart. And this gist of exemption should have come here. We'll see. Ajit, remind me at the end. Yeah. Taxation of capital gains. Oh, I think it is there down. Come down, come down, come down. I think it is a chart. Come down to the problem area, just above that. Just above the problem. Maybe 24. Above this. Go back. Correct. This is okay. This tax exemption of capital gain. Equity share EOF units and units of business trust. If it is sold in a recognized stock exchange subject to STT, then long term up to 2018 it is exempted. Now it is taxed at 10% without indexation. Be careful. 112A says so long term capital gain is taxed at 10% without indexation, comma, in excess of 1 lakh. In excess of 1 lakh is confusion agate, be careful. So if there is equity share, EOF units or units of business trust, if it's sold in a recognized stock exchange, if it is a long-term capital asset, so above 1 lakh rupees, straight away taxed at 10%, no indexation. If it is short-term, in your indexation 15%. Next, long-term capital gain, that's LZ BPD. Normally 20%. The right side arrow mark printing miss agide. If it is LZ, without indexation 10%, with indexation 20%, whichever is less. All other cases of the 20%. Long-term capital gain normally 20%. Short-term, all the short-term taxed at a normal case. It means 112A, 10% in excess of 1 lakh. No indexation. 111A, same thing for short term, 15%. Next, other LTCG, 112, 20%. Other LTCG, 112, 20%. Other STCG, normal income, say individual tax-led slab rates. Individual tax-led slab rates. Understood? Yeah. Yeah. Fine. So come down to the questions, Baba. Come down to the questions. House property and house property go back. House property is easy anyhow. Yeah. Go little up. So first question. Owns 2 houses at Bombay, wherein his family resides and other Delhi is unoccupied. He lives in Chandigarh for his employment purpose, rented house. For acquisition of house property, he has taken some loan. So it is basically interest calculation. Come down, ma. Come down. So I'll not get into the details. Come little down. Yeah. So interest calculation. Wait. Residential house property at Bombay. So 30 lakh into 10%, 3 lakh. But interest allowed is maximum 2 lakh. Big acquisition. Then repairs of a residential house Delhi. So repairs here you will get only 30,000 rupees. But put together both in aggregate, I said 2 lakh. Understood? For both the houses, for 2 houses, maximum 2 lakh. Come down. This calculation you have to do it later. Yeah. Next, come down, ma. Come down. Here also this is about, I think, calculation of the. Come down. Yeah. So here again they are given 25% is self-occupied. Calculation you do it, and the interest calculation comes to 37,500. So maximum reduction is available only 30,000 rupees because the construction was commenced before 1/4/1999. This 2 lakh is applicable only if you have taken the loan after 1/4/1999. So 30,000 restricted. And balance 75% let out property, whatever interest allowed, whatever interest you paid, fully allowed. And income from other source. And maximum house property loss which can be adjusted is only 2 lakh, 71 subsection 3A, tomorrow's class. Come down. Calculation, I'm not getting into that. See it, no problem. Down, fast. Down. So that question, there are a lot of irrelevant information. Repairs will be given, collection charges, don't bother. Here, 50% area, okay, was let out. So what you do, MRV or FRV, whichever is higher, that one or standard, whichever is less. then actual rent received or receivable, whichever is higher. So 96,000, are you there? 96,000, but there is a vacancy allowance. When you give vacancy allowance, so you go by my chart, whichever is higher. 81,000 or 96,000, whichever is higher. So 96,000 E is equal to D. So therefore vacancy allowance of 60,000. That's why 80,000 will become the actual rent. Are you understanding? Then you will be given a municipal taxes, actual municipal taxes. You want to note about municipal tax is a percentage of MRV and not GAV. Minus the same. That will give you NAV. Iska 30%. You want me to do house property problems? You know Alva. Okay, right. 30% of NAV down. Next, interest amount. Correct, Baba. Down, please, Sandhya. Yeah. Then self-occupied, be careful with the interest. Don't forget. This is what I was telling you. Annual value is nil. Interest calculation and total aggregate. Come down. Chaku. So that's okay. That's again simple calculation. You do it. It is easy. You do it straight away. Next question. This one is concerned. This is what I was telling you. When there are three houses, this is a very, very important question. There are three houses which are self-occupied. What you do, look at me. First, consider as if all of them are let out. You know how to do the calculation. Compute the GAV, less municipal tax actually paid by the owner, less 30%, less interest on borrowed capital. So this is the amount what you get. Did you hear? Here rent received barodilla because all of them are self-occupied. So all of you listen carefully. All the three houses compute as if it is let out. So you get this answer. Then what you do? Take 1 and 2 as self-occupied. Take third one as let out. Take 2 and 3 as self-occupied. First as let out. Go by all permutation combination. Come down, ma. So now let us say 1 and 2 as self-occupied. So if house 1 is self-occupied, mele top alide. House 2 self-occupied. There is the interest calculation which is restricted to 30,000. House 3 already computed on the top. Solpa mele goma. House 3 what the amount is 73,640 there. So if house 1 is solpa mele goma. Little up. Now if you look at this question, house 1 interest 0. House 2 interest 55,000. House 3 interest 1,70,000. Are you able to see that? Are you able to see that? Okay. So then house 1 and house 2 self-occupied adre. House 1 interest is nil. House 2 interest how much? Maximum we can give 30,000 because it is repairs. And house 3 let out property 73,640. Come down. If I go by this option, my total income will become 43,640. Understood? Okay, come down. Next. So next take house 2 and house 3 as self-occupied. Come down, ma. Let us take house 1 and okay. Let us take house 1 and house 3 as self-occupied and house 2 as deemed let out. So house 1 self-occupied, nil. House 2 deemed let out, mele calculation there. House 3, the interest is for acquisition up to 1,70,000. That means income comes to only 1,840. Same way, the last option you see. So the least income comes under the option 2. That is house 1 and house 3 should be self-occupied. House 2 deemed let out. So go by option 2. This is nodadalla. You have to work out individually. Madboda. Next, come down. Some theoretical question, come down. That's okay. House property, you can do it now. Enough. Yeah. So agricultural income, agricultural income from shooting, cinema shooting cannot be considered as a agricultural income. So only if it is used for agricultural purpose, it will be considered as agricultural income. This question should not have come here. It is agricultural income. Nursery, etc. If you have got plants, etc. on the top of our school, if you are doing nursery, it is going to be agricultural income. Come down. Capital gains kogama. Last on 5-7 minutes. Business income is important. है क्या? What is the section? Page number for capital gains? I think you went back on it. It's business income. Down, page down. Down. Keep doing page down, Baba. I think this is a capital gain. Can little go up? Can you go little up? Little up? Or is it a total income computation it came? Capital gain page number ಯಾರಾದರೂ? The normal it is a question. You went to the question paper, Baba. Here. Page. Okay. Sikto. Come down, ma. Yeah. ಓದಮ್ಮ ಕ್ವಶನ್ ಓದಮ್ಮ ಯಾರೋ ಕೀರ್ತಿ ಮಾತಿ ಶರಣ್ಯ ಯಾರಾದ್ರೂ ಓದಿ.
Mr. Roy, aged 55 years, owned a residential house in Ghaziabad. It was acquired by Mr. Roy on 10/10/2007 for rupees 24 lakh. He sold it for 65 lakh on 4/11/2017. The Stamp Valuation Authority of the state fixed value of the property at rupees
Whenever
72
the
lakh.
sale of land, building or both, actual sale value or stamp value, whichever is higher, has to be considered. There is some extra discussion which I'll have tomorrow. Today is already late, so we'll not discuss that. So tomorrow we'll discuss. So subject is sold at 65 lakh, but stamp value is 72 lakh. So look at the answer. Whichever is higher, how much you should take? 72 lakh. But there's a 105% continue, which we'll discuss tomorrow. Next. Hey, no. Why are you going down, Baba? All question ಮತ್ತೆ answer ಸ್ವಲ್ಪ ಅಲ್ಲಿ ಮೇಲೆ ಕೆಳಗಿರಲಿ. Make it
The
little
assessee
smaller.
paid.
So
Assessee paid.
ಓದೆ
Assessee paid 2% of the sale consideration as brokerage on the sale of the said property.
be careful here. It is a blunder positive. ಬರ್ಕೊಳ್ಳಿ note ಅಲ್ಲಿ. When sale of LBB, apply 50C, which I'll be discussing in detail tomorrow. Apply 50C. That is actual sale value or stamp value, whichever is higher. But brokerage is always a percentage of actual sale value. Understood? So the
Yes,
actual sale value is 72 lakh. Look at the answer. Brokerage 65 lakh into 2%, not 72 lakh. So it is brokerage is a percentage of actual sale value within the bracket and not on stamp value. ಇದು ಮಿಸ್ಟೇಕ್ ಮಾಡ್ತೀರಾ ಮಾಡ್ಕೊಳ್ಳಿ ದೇವರು ಕಾಪಾಡಲಿ. Yeah. Understanding? Wait. Okay. So then starting at 24 lakh is the cost is there. So reduce the index. So 72 minus 130 is called net sale consideration. Easy. Capital gain is very easy. Format theory ಗೊತ್ತಿರಬೇಕು. ಕೆಳಗೆ ಬಾಮ. Let's index cost of acquisition 24 lakh into this is any 17-18 question. ನಿಮಗೆ 19-20 ಕೊಡ್ತಾರೆ. They are given that indexation also. ಕಾಣಿಸ್ತಾ ಇದೆ ಅಲ್ಲಿ last line 272 divided by 139. They are given the indexation. It comes to capital gain. Exemption under capital gain. Go back, my heroine. So you sold house property, invest in house property. Odama.
Mr. Roy acquired a residential house property at Kolkata on 10/12/2017 for 7 lakh and deposited rupees 3 lakh on 10/4/2018 and 5 lakh on 15/6/2018 in the capital gains bonds of Rural Electrification Corporation Limited. He deposited rupees 4 lakh on 6/7/2018 and 9 lakh on 1/11/2018 in the capital gain deposit scheme in a nationalized bank for construction of an additional floor on the residential house property in Kolkata.
So the due date pakabari 31st July. Nothing is given. You should take 31st July the due date. So what is the amount you have deposited in the capital gain account scheme within the 31st July? He has deposited only 4 lakh. The next 9 lakh he deposited 111. That is after the due date. Are you able to see?
Yes, sir.
So he purchased the residential property for 7 lakh plus 4 lakh. So it should be only one house. We should consider it only one house because additional floor. So 7 plus 4 you'll get exemption under 54. And very, very important, ಬರ್ಕೊಡಿ. Exemption under 54. Side by side ಬರ್ಕೊಂಡು ಹೋಗಿ ಮತ್ತೆ ಕಾಪಿ ಮಾಡ್ಕೋಬೋದು. 54 for construction or purchase 7 lakh plus additional floor in the same house. CGS within 31st July 4 lakh. if you consider additional 4 as a separate house, you will not get. I consider it as a part of the house because it's only one house. Understand that. If you consider a separate independent house other, then you will not get. Additional 4 in the same house, we consider as part of the one house. 4 lakh. Next. Very important. 54 EC for investment within 6 months. Due date barodilla. Be careful. For investment within 6 months. 6 months from the date of transfer. Melogama. In 6 months from the date of transfer. That is from 4/11/2017 up to 4/5/2018. Are very important. Therefore, 54 EC only 3 lakh. ಇಲ್ಲಿ ನೀವು 31st July ಅಂತ ನೋಡ್ತಾ ಇರ್ತೀರಾ, ಟೈಮ್ ಎಕ್ಕುಟ್ಟು ಹೋಗುತ್ತೆ. ಐ ರಿಪೀಟ್ ದಿಸ್ ಪಾಯಿಂಟ್. ಸರ್, CGASಗೆ ಟೈಮ್ ಲಿಮಿಟ್ ಇಸ್ ಅಪ್ ಟು 31st July ಅಥವಾ ಡ್ಯೂ ಡೇಟ್ ಆಫ್ ಅಂಡರ್ 139(1). ಕೇಳಿಸ್ಕೊಂಡ್ರಾ? 54 EC ಬಾಂಡ್ಸ್ಗೆ 6 months ಟೈಮ್ ಮಾತ್ರ ಇರೋದು. 6 months ಫ್ರಮ್ ವಾಟ್ ಡೇಟ್? ಡೇಟ್ ಆಫ್ ಸೇಲ್ ಸೆಕೆಂಡ್ ಲೈನ್ ಇಸ್ 4/11. 4/11 ಇಂದ 4 May ಬರೆ ಸಿಗುತ್ತೆ. ದಟ್ ಮೀನ್ಸ್ 3 lakh rupees CS ಡೆಪಾಸಿಟ್ ಇನ್ ಬಾಂಡ್ ಇನ್ 10th April ಸಿಗುತ್ತೆ. 5 lakh ಆನ್ 15th June ಸಿಗೋದಿಲ್ಲ. ಅಲ್ಲಿ ಕೆಳಗೆ ಬರೀ ನೋಟ್ 5 lakh ಆನ್ 15th June ಬಿಯಾಂಡ್ 6 months. ಅಂಡ್ ಬಾಂಡ್ ಹೆಸರು ನೋಡ್ಕೊಳ್ಳಿ, ಓನ್ಲಿ 4 bonds. Also 9 lakh in CGS beyond 139(1) due date. Beyond 139(1) due date. Further, 54 EC only for 4 bonds. NHAI, NHB ಅಂತ ಬರಿಬೇಡಿ, ನ್ಯಾಷನಲ್ ಹೈವೇ ಅಥಾರಿಟಿ ಆಫ್ ಬಾಂಡ್ಸ್, NHAI. Next, RECL bonds. PFC, Power Finance Corporation. Next, IRFC, Indian Railway Finance Corporation Limited. ಇದು 4 bonds ಬ್ಯಾಟ್ ಮಾಡಬೇಕು. ಅರ್ಥ ಆಯ್ತಾ ಎಲ್ರಿಗೂ?
Yes, sir.
So this is a computation mechanism. Sale value minus expense incident to sale. Come down, ma'am. This question has almost everything. I think I have taken up that. Come down, heroine. So then exemption, look at it. 7 lakh plus 4 lakh. Be careful again. That 4 lakh should be in the same building, additional floor. Then 3 lakh rupees for 54 EC. Aste. Come down, ma'am. With the note.
No, sir.
Able to hear me?
Yes, sir.
Yeah, fine. Come down, ma. Come down. Data network issue. That's okay. Sorry. Solve melogama. So the next question is about a purchase of share. Bonus shares cost of acquisition is nil. Bonus share because you are giving free, you know. Dog money mari hakbitre the free tane. Okay, free. Okay. So the sale value minus brokerage, again be careful. Then cost of acquisition, okay, of the shares, what is given there straight away, it is not complicated. Come down. STT shall not be allowed, I said. Bari again, sorry. STT shall not be allowed on the capital gain. Bonus share cost of acquisition is nil. So they have done that capital gain. So normal case complete. Matte bonus shares. They have to add madi. I think both are short term. ಇಲ್ಲ ಬೇರೆ ಬೇರೆ. ಓಕೆ. ಸೊ ಇಲ್ಲಿ ಕಂಪ್ಯೂಟೇಷನ್ ಮಾಡ್ಬೋದಲ್ವಾ? ಸೇಲ್ ವ್ಯಾಲ್ಯೂ ಮೈನಸ್ ಕಾಸ್ಟ್ ಮಾಡ್ಬೋದಲ್ವಾ?
Yes, sir.
Long-term capital gain. Okay, right. Correct, Bunny. Tax computation. Total income 5,92,000. ಬರ್ಕೊಳ್ಳಿ ಎಲ್ಲರೂ 5,92,000. 2 RMRs. Special income LTCG. ಇಲ್ಲ ಒಂದು ನಿಮಿಷ ಅಲ್ಲಿ where is that? What? Can you just go up? I think age of the person is. His age is. Oh, okay, right. So very important, very important. Okay. So all of you, I'm sorry. Write down. 75th birthday ಅಂತಿದೆ. ಅದು clue to you. Mr. Mithun is, age 60 to 80 years. He comes under 60 to 70th birthday. 70th birthday ಅಂದ್ರೆ ಏನು? So 3 lakh. BL 3 lakh. ಬರ್ರಿ ಕೆಳಗೆ ಬನ್ನಿ. ಇನ್ನು ಕೆಳಗೆ ಪಾಪ. Okay. So 2 RMRs. LTCG 112A. LTCG 112A 1,96,000. 1,96,000 less 1 lakh. 1 lakh ಗೆ exemption ಇದೆ ಗೊತ್ತಾ? Equity shares sold in STT 112A 1 lakh exemption. What is the balance?
96,000.
96,000 into 10%, 9,600. It's important problem. Computation of tax important. ಇನ್ನೊಂದ್ಸಲ ಹೇಳ್ತೀನಿ. LTCG on equity share EOF unit up to 1 lakh exempted. Excess is straight away taxed without indexation. Indexation ಮಾಡಂಗಿಲ್ಲ. 96,000 into 10%, 9,600. Right side. STCG normal income 3,96,000. Underline up to 3 lakh BEL. Is 75 years. Be careful. 2.5 lakh. But we could talk about it. Nil. Balance 96,000 into 5. Is it 112 case? Oh, yeah. It is not normal income. I'm sorry. Okay. So balance, Ali right side balance, normal income. Everybody. Balance 111 income. 111 income. 111 income. So up to basic exemption 3 lakh ಕೊಟ್ಬಿಡಿ. No problem. ಕೇಳಿಸ್ಕೊತಾ ಇದ್ದೀರಾ?
Yes, sir.
It is better to give exemption from there because it's taxed at 15%, where LTCG is taxed only 10% for tax planning. So right side balance 111 income 3,96,000. Underline basic exemption limit up to 3 lakh nil. Balance 111 income 96,000 into 15%. Important. 14,400. So now correct. 9,600 ಮತ್ತೆ 14,400 connect ಮಾಡಿ. 24,000 plus 4% HEC. 24,960 under section 140A self-assessment tax. Note ಬರೀರಿ. SSC is 75-year-old. BEL 3 lakh. Number 2, both capital gain are related to equity shares sold in RSC. Two RMRs. Long term 112A. Amount in excess of 1 lakh taxed at 10%. Short term 111A taxed at 10%. 15%. 111 15%. Make a circle for 15%. For BEL used from here. BEL you can use from both, but 15% better alva. ಅರ್ಥ ಆಯ್ತಾ? Come down.
Yes, sir.
Come down. Story ಕೊಟ್ಟವರೆ go through ಮಾಡಿ. Next question again is about sale value, stamp value ಇದೆಲ್ಲ the same. Actual sale value, stamp value whichever is higher. Indexation. Capital gain accounts ಇದೆಲ್ಲ ಮತ್ತೆ ನೋಡೋಣ. Come down. This again it includes some income from other sources. Fine. Yeah. Come down, ma. This is about, I think, slum sale. Important. Slum sale. So, A is a proprietor package 2 units. He transferred on unit 1. Unit 1 node kodali. Unit 1 by a slum sale for 25 lakhs. So, barkole slum sale 50B, 50B. Normally LTCG, unless unit was for existing for less than or equal to 36 months. I'm teaching the law also with the help of problem. Normally LTCG, unless unit was existing for less than or equal to 36 months. I'm using very shortcut language. Here it is long term because they said, question nodi, third line, start in 2005-6. Yavaga?
5-6.
5-6. You right? Net worth is equal to 2 RMRs. Left side assets. Middle less. Right side external liabilities. ಸ್ವಲ್ಪ ಕೆಳಗೆ show me a little bit. Yeah, down. One by one. Assets ಕೆಳಗೆ. Unit 1 ಮಾತ್ರ ನೋಡ್ಬೇಕು. ಸಾಕು. Yeah. So unit 1, building. Yeah. Within the bracket at WDV and excluding revaluation impact. Well, okay. Unit 1 node within the bracket 12 lakh minus 3 lakh. 12 lakh is the building value given. It includes revaluation. You read the adjustment number 1. Revaluation reserve created. Revaluation is unheard. Remove made. 12 minus 3 lakh is equal to 9 lakh. Next, machinery at WDV under 43.6. No information. We go by that. 3 lakh. Debtors book value 1 lakh. Other assets book value 1,50,000. I repeat, building alli 3 lakh revaluation ತೆಗೆಬೇಕು 9 lakh. Machinery 3 lakh book value. Normally WD of income ತೆಗೆಬೇಕು. They are not given. We go by that. Then debtors book value 1 lakh. Other assets 1,50,000. There's one more adjustment. Other assets of unit 1 include patent acquired on 1/7. Oh, only there. Sorry, mistake for 50,000 on which no depreciation has been charged. So other assets ಅಲ್ಲಿ 1 lakh ಅಂತ ಬರಿ book value. Other assets 150 minus 50 1 lakh. Bradra. Then patents 50,000 minus 25%. You have to charge depreciation. 50,000 minus 25%. Correct, Bunny? This is okay. What is the previous year? Have they given the previous year for this? 1920, alva? Okay, so then you have to do 17, 18, 18, 19, 2 years. It's worth 50,000 minus 25% minus 25%. It's worth
28,125.
28,125. ಅದಕ್ಕೆ ನೋಟ್ ಕೊಡ್ತೀನಿ ಸುಮ್ಮನೆ ಬರೀ ಈಗ. I repeat, building 9 lakh excluding revaluation. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Machinery under WDV, they are not given. We take it as it is. Income tax WDV presumed to be 3 lakh. Debtors book value. Then other assets 150 minus 50. That patent 1 lakh book value. Patent 50,000 minus 25% minus 25%. WDV approach 28,125. Total comes to 14,28,125. Left side. Right side. Go to the right side. Go to the problem. External liabilities. So very interesting. Go little somewhere put it. They only said 70%. Okay, external liabilities. But bank loan 2 lakh into 70%, 1,40,000. Book value. They are all at book value. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? Trade creditors 1,50,000 into 25%, 37,500. Total 177,500. Now connect left with right. Assets minus liabilities. ಕ್ಲೀನ್ ಆಗಿ ಬರ್ದೀರಾ?
Yes, sir.
1250 625.
625.
This is called net worth. Next line, LTCG is equal to is 1 by 1. Sale value 25 lakh. ಮೇಲೆ ಹೋಗಮ್ಮ ಕ್ವಶನ್ಗೆ. Less expense incidental to sale 28,000. ಅದು ಆಲ್ವೇಸ್ ಮೈನಸ್ ಮಾಡಬೇಕು. 24 lakh 72,000 NSC. Less net worth, no indexation. ಎಷ್ಟು ವಾಟ್ ಎವರ್ ಕಂಪ್ಯೂಟರ್ ಸೂಪರ್ ಎಷ್ಟು ಬಂತಮ್ಮ? ಅದು ಕೆಳಗೆ ಬಮ್ಮ, ಸ್ವಲ್ಪ ಕೆಳಗೆ.
12,50,625.
12,50,000
625.
difference LTCG. If the undertaking was there for more than 36 months, is always LTCG. 1221,375. ಅರ್ಥ ಆಯ್ತಾ?
Yes, sir.
Okay, right. Note ಬರಿ, note 1. Building 12 lakh include revaluation, exclude 3 lakh. To stop. The term revaluation is unheard in income tax. If included, exclude the same. Comma, if included, exclude the same. ಅರ್ಥ ಆಯ್ತಾ? ಎನಿವೇರ್ ರಿವ್ಯಾಲ್ಯೂಷನ್ ಇನ್ಕ್ಲೂಡ್ ಆಗಿದೆ ಮೈನಸ್ ಮಾಡಬೇಕು. ನೆಕ್ಸ್ಟ್, ಬಿಲ್ಡಿಂಗ್ ಮೆಷಿನರಿ ಪೇಟೆಂಟ್. Building machinery patent should be at WDV 43.6. If they're not given, you should take it as the same value. Next, patent purchased on 1/7/2017. Accurate 17-18 more than 180 days. ಅದು ನೋಡಬೇಕು. ಅದು ಬಿಸ್ನೆಸ್ ಇನ್ಕಮ್ ಅಲ್ಲಿ ಬರುತ್ತೆ, ಕರೆಕ್ಟಾ? 17-18 more than 180 days 25%. 18-19 25% WD basis. ಅರ್ಥ ಆಯ್ತು ಅಂತ ಅಂದ್ಕೊಂಡಿದ್ದೀನಿ.
Yes, sir.
Next, all other assets and liabilities at book value. ಕೆಳಗೆ ಬಾಮ್ಮ. ಅಷ್ಟೇ, ಕೆಳಗೆ ಬನ್ನಿ. ಕ್ಯಾಪಿಟಲ್ ಅಸೆಟ್ ಇಂಟು ಸ್ಟಾಕ್ ಇನ್ ಟ್ರೇಡ್ ಹೇಳಿದ್ನಲ್ಲ ಇವತ್ತು, ಅದು ಥಿಯರಿ. ಅದೇ ಕ್ವಶನ್ ಅದು ಮಾಡಿ. ಕಮ್ ಡೌನ್. Conversion of capital into stock in trade, two incomes will arise. Important it is. Please go through that. Okay, come down. So, business income is what? Wait, 1 second. Business income is what? Sale value minus fair market value. So, if it is long term or short term, business income will impact agala. Long term capital gain is fair market value minus cost of acquisition. Whatever I said, straightforward. Indexation year of indexation numerator. Indexation numerator. Only up to the year of transfer. Only up to the year of transfer. Important. Small a. Normally it is 289. Nimge normally 1920. Small b. However, 45(1)(a). 45(1)(a), no insurance money received. 45 within the bracket 1A. 45(2), 45(5). Consider the year of transfer. Say, capital asset converted in 1617, but sold in 1920. Answer. Capital asset converted in 1617, but sold in 1920. The answer. Indexation of numerator or CII of numerator of 1617, even though taxable in 1920. ಅರ್ಥ ಆಗ್ತಾ ಇದೆಯಾ? So if you look at here, the answer 264 numerator, even though it is the previous year 264, because it is converted in that year. Understood?
Yes, sir.
Yeah, come down. Yeah, normal computation. Body. ಇಲ್ಲಿ 54F, be careful. Okay. One more note, but e question, 49 question, for 54F, investment should be NSC, else proportionate. Normally, ಬೇರೆ ಕಡೆ ಎಲ್ಲ capital gains. ನಿಮ್ಮ ಸಿಲೆಬಸ್ ಅಲ್ಲಿ ಇಲ್ಲಾಂದ್ರೆ 54 GB ಅಂತ CFNL ಸಿಲೆಬಸ್ ಇದೆ, ಅಲ್ಲೂ ಬರುತ್ತೆ. Investment should be NSC, else proportionate. Is the bracket. For all other sections, investment capital gain. Okay, right. Down. Come down. Yeah. The general calculation. Section 47. When you gift an asset, gift Albari page of 50 paka. And the capital gain chapter, no concept or relative. Relative non-related concept illa. Adu naale barutte. Most of the transactions of 47, they are not transferred. Come down. Check. So this is where we have reasonably concluded. Okay, so 3 heads of income: salary, house property, and capital gain. So business and some other important discussion tomorrow. So 3rd day for special discussion. Yeah. So thank you, viewers. Thank you, Aditi.